before the film begins.
Check 1, 2, baby. Check 1, 2. Yeah. Woohoo! Hope I get some coffee going soon. Yeah. We say woo-ha! Check 1, 2. Okay, done. All right. Here we go. Good morning, everybody. Oh, you're all here. How are you all doing this morning? We're getting a bounce right now on. We're getting a bounce right now on the half-hour trigger, but someone's just asking. I can see someone asking in the chat right now. Catching a bounce on the half-hour trigger right now, but we'll talk about it here. We'll look at it here in just a minute. So give me just one quick second. There's no rush here. If you're already short, you should catch the bounce and get a rejection above. We'll look at it right now. Hang tight. What do I gotta do here? I gotta keep out the Russian sex bots and stuff. Keep those people out, and then here we'll go right over into it. Hold on here. All right. So you're seeing a bounce right now. If you look on the top right-hand side of your screen, you're seeing the bounce on the half-hour trigger. Now, so this is something, if you have this tool, I'm going to talk to you about this, okay? So just because you bounce on the half-hour trigger does not mean that you buy it and continue on. Price still needs to be above the 1 and 5 minute trigger, okay? So so you need to get above that. Yeah, I guess you could take a 5 minute trade or something like that, but you need to get above, to be bullish, you need to get above the 1 and 5 minute trigger. So price needs to be above the 1 and 5 minute, even if it slams down on the half-hour, hour, daily, doesn't matter. So, hey, good morning, everybody. How's everybody fucking doing this morning? I swore in the first 5 minutes. Today was outstanding. It was a really, as a matter of fact, this whole week's been good, and I'm very happy. COVID gone, which is good to see. Hold on here. Give me one quick second here. We got a bunch of stuff to go over today. Busy day, busier than it might even seem. So we will go over a bunch of stuff here. So what you should see happen here is you should see a bounce off the half-hour trigger. If you're bearish, you are looking for a continuation to the downside and a rejection up here, okay? To slam back down, slam into that hourly trigger, and then continue to make our way down. The other thing that you're looking for is, I'm going to switch over here.
Says to lower rates, you'd need to be confident inflation is headed back to 2%.
And we got a lot of talking to do here. So yesterday hold on, we'll go over the Webull chart really quick. It's a split chart right now. And
Do you want to stay up to date with the latest and be on the bleeding edge of
if you're going to look at SPX, right? So here's SPX. Let's take a quick peek at SPX over here. Had this gorgeous squeeze up here, right? Woohoo! Went all the way up. We want to come back down and bounce off of 4575 to build up what we need to get up there and trade that 4600. Now, we pulled back, right, to the 4575, and we're underneath it right now. So what we don't want to see is we do not want to see the squeeze up, break underneath, and begin to reject here in this 4575, because that will likely lead to more downside to come, or at least to close this gap down below here. So you see this big fat gap right here that needs to be closed. It doesn't need to be closed, but it should be closed. You don't see a lot of gaps on, we turn this shit off. You don't normally see a ton of gaps on SPX. you will sometimes see gaps on SPX, but it's very rare. You'll see them on SPY more frequently, not so much on SPX. So this gap likely needs to be closed, the high probability of it, and then what we'll do is we'll look for a trade. So I'm expecting at this point for this gap to be closed, to let rest of this gappage down here, and you can actually see the gappage over here on SPY, excuse me. So it would not surprise me to see all this be gone, okay? For a pullback and to close up all of those gaps to the downside. So is there a trade here for you? Unless you're in put, I had some puts a few minutes ago. I actually sold this right here. Oh, wait, you can't see that. I basically sold this right here for a brief bit, but then I had to put the show on, so I got to fucking close this stuff and get with you guys. So what we'll do is this one's on the 1 minute chart right here on the bottom. Let me see if I can bring this up so you can see this for the rest of today. And this was the first target was hit up here. Next target above is this one right here. This is the I believe this is the summertime high, I believe. I think it's 45, 80, 90. I believe is the don't quote me on that, but I believe this is the summertime previous high that we have to take out. So give me one quick second here. And we'll go right back to the main screen here. So how are you guys doing? Good morning. How's everybody doing out there? Hope you're all doing well. Let me look at what you guys are saying. Good morning, Limit Buyer, Spaceman, Jail Mighty, Beartown Sheriff, Merp for Life. What up, Spaceman, Frotron Alpine, Dr. Gone, Stretching Walls is in the house. No, am I still holding my calls? Fuck no. I went onto Twitter and told people I'm selling right here. So I sold this red bar right here. Let everybody know I got $1.32 for I think 24 cents or something like that. But I did sell my calls on the rip up and let people know on Twitter. Good morning, everybody. Let me do a quick thing here. I got to post this live stream. Just let me post this live stream. I always forget to post the live stream on Twitter. So let me just post this really quick. And QQQ. And we're going to do GME. We're going to do Tesla. And we're going to do GME, SPX, ES, ESF. And I guess I should have done NQ too, but NQ. We can do IWM too at some point. We'll talk IWM at some point here. With Tesla plan. Oh, hold on here, post that. Okay, so that's posted. Now, oh yeah, babe, pump it up, baby. It's a good song. Okay, so let me read through the rest of what you guys are saying here. Cap is rich. Yeah, it was good morning. You ran with the money on puts. Fed running it today. What's up, champ? Hey, good morning to the point. How you doing? Good morning. Stock market show. Starting now, members, that's me. Can you gift a sub with points? All right, so we'll get into the points thing in just a minute, but I will get back to you on that. Good morning, Johnny. How you doing, brother? Yeah, dude, puts working out great. Thanks. Hey, you're welcome, Spaceman. Captain Pottymouth. Yeah, dude. I know, F-bomb alert. How are y'all doing out there this morning? It's a really good morning, so give me one quick second here. I missed this right here. Hold on. I'm gonna grab some 455s here and try to see if we can sell this bad boy down. How are y'all doing here? Good morning. So trend we know is 455.61. Let me see if I can write this in. It's right down here. This is trend down here. 455.61 right there. That's trend. A little bit more down to go. Not too much, though. We're going to get rid of that one. And we already took that one out, so we'll get rid of that one. This R3 is the last one up above. I've got 455 Ps if you want to know. Yeah, someone asked me on Twitter this morning if I was going to sell the open, and I told them on Twitter that we should green bar it up, and I'm going to hold. So I did tell someone on Twitter this morning that I was going to hold. I was waiting until the end to see if, or I was going to wait. I think I waited until 9:15 to figure out if I was going to hold past the open or not. But this morning it wanted to green bar it up and take out that red bar above, and it did. So I'm pretty happy with it. We do have some stuff to talk about. We should talk about the JPM caller. December, we're going to talk about small caps, historical precedents for small caps this morning. So we're going to talk about what to expect into December, and we're going to talk about what to expect into the new year. This is something that you want to watch. You need to watch this. You should go grab your friends today. Go on FinTwit. Matter of fact, you should go on FinTwit. I just posted a link to the show. And here, I'll do a Twitch link too. Tell all your friends to gather around because we have some chatting to do about what to expect coming down the road. And what does it all mean, that kind of stuff. Now, I want to say something here, too. You know who made a really good point this morning was Jedi Marcus made a great point this morning. And he said, well, let me see what he posted this morning. Let me find Jedi Marcus this morning and see what he posted. He made a very valid point. And his point was, let me see what he wrote here. He said what? He said, my 5-date SPX 4800 calls are going to pay off. And I thought that was fascinating because I don't know if he means this, but I think that he does. And his point is that you don't really have a lot of time to get to 4800, do you? Chase brought this up yesterday, too. Chase brought up a point. Hey, thanks for subscribing, everybody. If you guys are having a great day, do me a solid here. Repost my link or my post to the stream today so your friends can come watch the show and not come back and chase, right? Like chase and be like, hey, are we going to keep going up when we're up there or down there or whatever? So he made a good posit this morning. I don't know if he meant this, but I think he did. He's a very smart man. He's an old school pit trader. And his point this morning was my 5-date SPX 4800 calls are going to pay off. And the point that I think he was trying to make was if you don't get up to 4800 pretty fucking soon, right? Pretty soon, maybe not 5 days, but pretty soon, you might not get that 4800 before the market really begins to roll into the next year. So I thought that was a great post from him this morning. It only got 17 likes, and I'm like, people don't pay attention out there. And I really like that post that he made this morning about I really like that post that he made this morning about 4800. I think that thesis is basically the same thing that other people have stated, which is you only have so much time as a bull. So let's say we hit 460 and start rolling down. Let's say we close all the gaps at 440 and stuff. Do you really have the time to, let's say we slap 460 and we start heading down. Do you actually have the time, even into the beginning of the year, to get to 4800? And Chase mentioned that yesterday too. And I'm starting to tend to agree with these guys. Like, you kind of have to keep running. You kind of have to put the other 200 points on the board, get to 4800, and you're off and running. If you don't, you're kind of saying, I guess we're not getting 4800. You might catch it in the new year, but this segues into the next part I'm going to tell you, which is small caps should outperform into March of this upcoming year. And if they're outperforming, you might not see that performance to 4800 that you're looking for out of SPY or S&P 500 unless they actually do that. Now, I know he made that post this morning in jest, but at the same time, it brings up the question mark of, hey, if everybody out there is calling for 4,800, then you should see that. You only got 4 weeks to see that 4,800. So we either got to stick around 4,600 to get there, or we have to start making that march up to 4,800 into end of year. Now, I don't think that you're I don't think that I don't know if I care if it goes to 4,800. I'm more interested in performance into March and not being panicky about the markets into March. So we're going to talk about the IWM, the small caps, the RUT, the RTY, smalls today. We're gonna have a conversation about it today and see if we can gain any insight into the expectations. What are you doing, Kitty? Good morning. Come here, Kitty. Sorry, I got another one of these new cats with me now. How you doing, buddy? Coming in to say hi? You guys want to... Hold on a second. Just took some profit here on some 455s. I'm looking for a bounce and then a bloodbath here in just a moment. Just one quick second here. We'll show that up. I just took profit just now for 28 cents. So I'm going to try to jump back in here in just a second, get a better positioning. So I think that small caps trade, if you're going to take the trade for the end of rate increase, we're going to talk about rates today too. I was flabbergasted yesterday after the show. I went down the rabbit hole on what the news was, the shit they were shoveling out to people yesterday. I read all of the speeches and I took a lot of it as double talk. I read all the speeches yesterday that came out, and then I read the news on those speeches, and I was like, what the fuck are they saying right now? I was like, what I read was just pure garbage. Hold on a second here. Oh. Scratch that. I didn't sell. I never got a fill, so I'm still sitting here in puts. I apologize. I didn't catch that. I didn't get that fill. Hold on a second here. I'm still long on 455p. So I read all the quotes yesterday, and then I watched the news, and I was like, this is, they're out of their fucking minds. They're pushing this this narrative right now of cutting rates. It's not that I shouldn't, like, the narrative, not whether we cut rates or not, or when we cut rates. Even if we're betting that we're going to cut rates in the springtime, that doesn't make it fucking so, right? Just betting that doesn't mean anything. And it still brings up the question that hasn't been answered yet. And what's that question? Dude, seriously. I got to sell this shit. Hold on here. Yeah, maybe I'll just stay him. Fuck it. I'll just stay in him. So the Fed only has so many tools. You don't have yields paying, and what does that mean? If you don't have yields paying, how do they continue their operations? It would only be through rate increases. So I'm here scratching my head on all of this. And even if they are going to cut rates, so let's say I'm saying that to you, even if they do cut rates, let's say they do cut rates, we normally still have a major fucking roll that comes out of this. And it usually gets front run a couple months in advance. So I think they will be cutting rates personally heading into summer and fall, chasing into winter of 2024. I just don't know. I don't like, I guess what it's, how we're interpreting it is inaccurate even if we do cut rates. In a matter of fact, in my own view, if you're a bull, if you don't want the bull run to end, you would probably do better with a rate environment and not rate cuts. I would caution you If you believe that we're going to have rate cuts, a pause and rate cuts, I read this morning 2 rate cuts next year, I would be very wary and scared of a major roll from that event if that's the truth. And we'll be able to see it if it happens before it happens. But if it happens, I'd be pulling the plug on everything you own in the market and then re-entering after that takes place. There's a high probability that you'll get a major roll down. And if they're calling for rate cuts in springtime, that would mean that they're going to front run that process. That would mean in December, they're correct. December, you would see the roll start early if that was true. It's usually about 2 months, 3 months in advance. You'll see 2-3 months in advance. You'll end up seeing that major roll take place. If you don't believe me, I'll try to post some of this stuff on Twitter so that it's permanent. The examples of that happening, so you can see it. Ah, shit. We're fucking bouncing here. Come on, man. I don't know if I should just leave these on, or I know we're gonna squeeze here, so I'm like thinking to myself right here. I'm like, come on, just give me a big fat fucking reversal, red candle straight down, so I can get better positioning. I wish I had a position. I wish I had my position right here. That's what I meant to take, was that candle right there. I ended up catching, I think, somewhere in here. So I'm like not flat, but I'm not up too much. I could have made like 5 or 6 cents or something, so I'm kind of stuck here. Poor positioning for Captain Jim James. So, anyways, we have a lot. We're going to go into detail about this today. We're going to go over this. I'm going to show you the data, show you the historical significance, and all that kind of stuff. Bear's going to fuck up again. All they can do is sell tops. Burr, baby, burr. You're welcome, old Bachazo. Oh, El Pachazo is. Everybody's handing out subs today. Whoever's giving out subs today, congratulations and thank you very much. Yeah, they're grinding my puts right now. They're just fucking with me right now. I think I should just sell them. Hold on here. I gotta watch this really close. Give me 1 second here. I'm gonna watch this this action right here because I'm gonna get fucked. I don't feel like giving any money back to this fucking market. The VIX is testing its 27 EMA in a 1 minute chart here. We need to see that hold. If it rolls, we're going to get a pretty fucking fat squeeze here. Tesla rolling down right now too. We're going to chat about Tesla at some point this morning. And we're going to talk about GME and where to buy a dip, that kind of stuff. Come on, fucking Bears. Put your back into it. Put your fucking back into it, Bears. You dirty fucking stinky Bears. Come on, Bears. Close the fucking gap on SPX. Nope. Yeah, not bad. Hold on a second here. Kind of flat here right now. I'm up a penny or something like that. Come on, Bears. Anyways. All right. I'm flat right now. Even if we go down, I have bad positioning, so I'm flat again right now. I don't want to fuck around with this. I don't like having bad positioning, so I think I'm positioned right, but I think I entered the wrong place. I just don't want to fucking deal with it. Okay, so hold on, let me read through the chat real quick and see what you guys are saying. Hey, Will, I was looking for. Oh, hey, Will, I meant to tell you, or I'm seeing you chat right now. Will, I wanted to say to you, I've been noticing that you weren't here. I hope everything is all right and you're doing well, brother. I haven't seen you in the chat, my man. What up, Bazra in the house? John Haggerty in the house? Flama Blanca in the house? Tesla call wall is at 250. Yes, we had a. See, I would have got. Oh, thank God I didn't get squeezed out of that shit. Oof. I'm so fucking glad I got out of there. Look at that squeeze happening right now. Let's get Tesla. Should we go over Tesla really quick and GME and just get it out of the way? So Tesla. Let's look at Tesla really quick. Trigger screen. Yeah, right there. Let's look at Tesla really quick. You had a bar up here, right? This was that 247 into the close yesterday. Hold on here. Let me open this up there. Wait a minute. What's going on? Show that. Okay. Never had the pullback over here in Tesla, but we did get up and hit our first target. Then we took out our second target, or close to our second target up there. This was this line right here. Remember this line that we had right here? So we took out our second target. And then we've got some more vol up ahead at 254.81, 257.68, 263, and then an ultimate price target up here of 268. There are some other places to look for above. We've got 276 and then 293. The real major thing here for if you're a Tesla bull, the real major thing here is that you've got all of this volatility right here. This is not easy to get over. My initial reaction here is, let me see if I can put this on a daily to show it to you. Why I have these here and why these bars are here. And where these bars, I want to point out a couple things to you. See this right here? See that? That little tick, that top tick right here? This is where these sellers are back here, right? They're going to come in and sell you down. This next group of sellers is up here, right? And they're going to try to sell you down as well. Now, you do have another little bar right in here. You get that little top tick. That's where sellers stepped in as well. So you've got a ton of like traffic to get. You have to like bust through. And I think you can break through it. I just think that it's a matter of, here's your other one up here. And then you've got one more way up here. Let me see if I can show it to you. You got one more way up here. That's what all these little lines are. We can make these bigger, I guess, for you guys out there. There's one. There's another one. And then here's another one right here. Make that 4. We got this one right here. And we got this one right here. Can I tap that one or no? All right. Well, that's where price is right now. So the idea here is that you're going to need, and I think someone just said the call wall on Tesla is 250. I think someone said the call wall is at 250. So you're going to need more call buying to come in and stuff like that, more puts to come in to fuel that run up higher. And you're going to probably need some news to really break above, and you're likely going to need the event to be the catalyst for that. So this is what I would say to you as a, and you actually have a bull cross happening right now. You have the daily trigger crossing the hourly trigger right now on this. This is very positive, by the way, for, and that's what this bar is right here too, is that big cross that you have right there. The point I'm trying to make to you, though, is you likely need news-driven news for us to actually smash up here. And what I think that news will or can be is going to be the event. I think the event is the, oh, kitty. I got a kitty at my feet right now. He's sitting on my foot. He's sitting on my foot right now. I don't know. Cats are assholes, but these cats are babies. They guess they like me for some reason. The idea here is most of their events are not during market hours. You have the event during at least one market hour, and then you at least have the ability to horse trade equities, or even some of the 23-hour or 24-hour a day indexes that you can trade synthetically for those tickers, or for that ticker specifically. So I think for you to get up here, the big takeaway here is, let me show you this here. The big takeaway here is this, okay? Look to buy 244 right now, 244, 245, right? And I would also say to you I'm going to tell you something here right now. If you're a Tesla bull, write this shit down. Trend to the upside lies at 244.54. 244.54. If you hold that number, this trade to the upside is still alive, okay? The only way you're going to get that trade to pay or print is unknown news from Elon. Listen to me closely. Unknown news from Elon, okay? I can't stress it enough. I told you guys yesterday, I think I told you guys that if you were to trade 10 Tesla events, you might miss this one, but 9 out of 10 or 7 out of 10, it would have been better for you to wait until after the event. Now, this event is unique. Normally, those events are after market hours. This one happens to be during market hours. I'm going to expect that this event is during market hours due to Australia just waking up, England or Europe being able to trade it, the U.S. being able to trade it. They probably know that this will have a market impact. Just like earnings. When you have earnings, companies will do after 4 p.m. earnings if they have high expectations. If you see a company that normally does after the close earnings and they switch to a morning earnings, it's usually not a good thing. So my point to here is that I think that they're going to drop something on you. I told you what I think that is. They're going to claim that you're getting FSD 4 or 5, level 4, level 5 FSD. Now, I don't believe that that's real. It's going to come out, shock the market to the upside, and then it's going to be further discussed, and you're going to find out down the road that that's 3 to 5 years away. And that's what it is, about 3 to 5 years away if you don't already know that. So I would say to you, if that doesn't happen, or some news that we don't know comes out on that Tesla event, you're not going to see those prices up there. You might see them. You may see them in a couple weeks, and you might not see them if the market even rolls over. This could be a tease here. So the only thing that I could tell you on this would be the prudent thing to do would be to wrap it up before you get to the event. Like, wrap up your longs, sit on your hands, and wait until this expiry is over, until this next Tesla option expiry is over, in case there is good news. Or maybe trade it by owning the underlying, or maybe trade it where you have a lot of fucking time on those calls and do call spreads. Do not just own fucking calls. You can't, I shouldn't say that, because when Tesla split, both last times Tesla split, I did own calls, but those only printed because there was renewed interest the following day. There was more call buyers stepping in to keep the IV high on those calls. So just be wary of it if you're a Tesla trader, Tesla bull, on that move and how you structure your trade. And you have a ton of volatility up here. That I want to, to get up here, you're going to need news. You need news-driven. You need all these shorts to come off. You need all these sellers and bears to come off for you to get to grind through that price action to get higher. So that is the one thing I'll tell you about Tesla here, okay? Do you have any questions about Tesla? What questions do you have about Tesla? So this orange bar right now is acting as support, all right? So this is your new support right here. And you're going to be waiting for the hourly trigger to come up, right? This hourly trigger is going to come up, and you're going to try to trade that up again, right? Get that new high and then start smashing into this stuff and grinding up, okay? So we'll monitor that. And also a note here, we will trade the event together tomorrow, okay? So if you're a Tesla bull, we'll be trading it live tomorrow afternoon. If you have any questions, ask them inside the chat right now so I can answer them. If you're a Tesla bull watching the show, I want you to know something. I am a Tesla bull through and through, and I've been one for almost decades at this point. I'm an old school Wall Street bettor. I was on fucking Wall Street bets when Elon was on there. I'm not going to tell you why else I'm a Tesla bull, but I could get in trouble, but whatever. I am a fucking Tesla bull. I own a Tesla, and I'm just not one of those. I'm not Tesla gang a lot because I think that Tesla investors and traders have different things that they want out of being a Tesla investor and a Tesla bull. And I feel like Tesla bulls get caught up in Tesla gang. And you might have different aspirations than someone else that you're looking up to that's giving you advice. So I'm very like cold-hearted being a Tesla bull. And my preference, I am not the Tesla bull that's like buy at any price and I'll see you in 30 years. I like being a happy Tesla bull. And I'm telling you, when you see happy Tesla bulls, they know how to trade Tesla or invest in Tesla. They're not buying the highest prices, even if they're telling you. They're buying the fucking lows and they're owning for a long fucking time. So I catch a lot of shit from Tesla gang on tops and when things are difficult. And then I have Tesla gang that doesn't listen to me. We're in the bottom. So I get it from both sides of Tesla gang. If you guys have any questions, let me know. I want you to know something. If you want to be a happy Tesla bull and happy Tesla gang, follow me. And you can ask Tesla bulls. I know when to fucking buy Tesla. I can show it to you right here. I can show you right now. You want to see? You want to see how to know when to buy Tesla? If you're a Tesla bull, right? You want to know when to buy Tesla? I'll show you right now. You see these drops down here? I'm going to show you something. I want to show you something down here. This is guaranteed every time. You see that right there? You buy that down there. You see what happened? You took that and that right there, right? No problems, right? Tesla's like one of the easiest stocks to trade. I know people don't think it is, but it's super easy. If you have this tool, it's easy. Down there, you buy that, you get another run, right? You get another one down here in Tesla, right? We called bottom on Tesla too last year, by the way. There's another one right there for you. Buy that shit down there, comes right back up. So I want you guys to understand that if you're a Tesla bull and you want to be a happier Tesla bull, you can show up to this show and make your money, make your investments, and then go back onto your favorite place, Wall Street Bets, StockTwits, Twitter, and be a happy Tesla bull. Rather than just being a happy Tesla bull and being upside down for 20 years. Always being on the wrong side of that investment or trade. Hold on a second here. You want to be a happy Tesla bull, trust me. Trust me, you want to be a happy Tesla bull. Being a happy Tesla bull is one of the best things in the world to be. There's nothing like it. So, all right, we're going back to the main screen. So if you have any questions on Tesla, let me know. That is not hindsight. I've been doing this fucking show for 3 years. That is not hindsight. I come on this show and tell Tesla bulls all the time when it's time to buy Tesla. Not hindsight. I'm sorry. I've been doing this show for 3 fucking years. I fucking came on this show a year ago and told you what was going to happen this December, and it happened. I even knew that they were launching Cybertruck in December. Get out of here. Get the fuck out of here. Hindsight my ass. I got the proof. The one cool thing about making videos every fucking day is those fucking videos are sitting in my fucking YouTube. You can go back and check all of them. This isn't like hearsay and talk. Get out of my fucking face. I'm in the fucking Tesla gang fucking private fucking Twitter. You know why? With the big boys, the 1 million follower guys. You know why? Because I know what the fuck I'm doing with Tesla. I am a Tesla fucking bull OG from day one. Literally day one. Get out of here. First time. Hindsight my ass. Next time that yellow dip is down there, you'll be asking me, hey Cap, are we down there yet? You want to make some money and not get internet points? Fuck your internet cred too, by the way. You want to make money and be happy? You want to be a happy Tesla bull? Fuck all that noise. All right? I'll show you exactly when that happens to buy. I bought fucking Tesla, the actual bottom, in October and ran with it. And there's a bunch of people in here that did too. Anyways, I'm not going to talk anymore. I'm not mad at you, by the way. I don't hate you either. Stick around, okay? And we'll do some talking when we're in the shitter. Because when I'm making those calls down there too, right? You know what people say to me? You know what? You can go back and check the chat from those streams. And my fucking chat, right, is full. Hundreds of comments. Are you sure, Cap, that we should be buying the Tesla bottom here? Are you sure, Cap, we should be buying the SPY bottom here? I fucking come to the stream and I tell bears, take your money and run. I love bears. I tell bear, well, you guys, how many times I've been in the stream and I've said to bears, wrap it up, take your money and run. I say the same thing to bulls as well. So just stick around, watch this show, and when you're ready, and when it's ready to be bought, I will let you know when it's happening. Always before, never after. You check my Twitter, I fucking post my trades on Twitter always before. I am never going to be that trader or investor that ever comes out afterwards, paper trades some bullshit, right? Both sides, and then comes out after a fucking trade and shows you or posts some bullshit fucking paper trade and screenshot because they took both sides of the trade, and they say some shit on social media going, look at how much fucking money I made. It's always before. Always. That's my fucking rule. You'll never see me ever, ever, ever coming out publicly afterwards and saying I did this or I did that without a history or a record of what I did, either on stream or on social media. And I know for a fucking fact, because I know these guys, these sub-sellers that are out there. I don't sub-sell shit. I don't sell a goddamn thing in my stream. Nothing. Not a fucking thing. No sponsorships, no nothing. I don't make my money off you guys or none of that shit. So my point to you is that I know that people do that. I know that there's a ton of people that go out there and they show you the after only, and they brag and they sell you a subscription. I know all about it. I know what these guys do. I know them. I actually know some of these guys behind the scenes. I'll never be that guy to you, ever. I'll make you that promise until the fucking day I'm gone from social media. All right? I love you, so stick around. And you'll see me lose on this stream, too. I lose trades here, get smoked, and you guys get to watch it happen in real time with me. You've seen me. Some of these people on this stream have watched me fucking get destroyed, and I've shut the stream down because I'm so fucking angry at the money that I've lost. I'm a real fucking guy here every day with you guys, so sorry to bring that shit up, but that's true. I don't talk about it too much, but that's real deal, so I'm never like a 10 out of 10 winner. I lose on this show all the fucking time and get smoked. All right, let's get back to business here. So if you're a Tesla bull, stick around, and I'll make you a happy Tesla bull, especially if you're a young Tesla bull. I will make sure that your next 10, 20 years that you are a happy motherfucker. I guarantee it. You're gonna be a happy bull, happy Tesla bull. You will become Tesla gang. I will turn you into Tesla gang. You're in the Tesla gang boot camp in this live stream. You understand me? You're in Tesla gang boot camp now. You're under my thumb, bro. I'm just kidding. I'm just fucking around. But I promise you, if you're a Tesla bull, if you're a young Tesla bull, I promise you, that's my oath to you, that I'll make sure that you're a happy one forever. As long as you know me, I'll make sure that that's true. All right. I love you guys. Dude, I keep missing my shit here. Hold on a second here. Here comes SPY coming on down there. Remember that? Remember that what I told you, okay? 244.88. Hopefully this green bar comes up here to this orange bar up here. All right, we're going to get to SPY really quick. It's already rolling down again. I should have fucking bought that. I'm just flat right now. Okay. Hold on a second. I'm gonna buy it. Hold on a second here. Hold on here. I want to trade this if I can. I want to trade this bloodbath. I'm gonna put some bear tunes on for the Bears here. They don't get too much excitement these days. I'm gonna play some bear music for the Bears. Oh yeah. Woo! Watch that bounce off the hourly trigger right now, by the way. God damn. Look at that beautiful fucking push down right there. Woo. No, I don't want to do that. Coming down into the hourly trigger right now. SPX trying to close the gap down below on the bottom of your screen. The right-hand side, you'll see SPX down here still leaving a little bit of gap behind. Getting a break of support right now on the hourly trigger. I'm not mad at anybody. I'm not mad. All right. I have a cross of the 1 and 5 minute trigger in a little bit. We should test that cross. Got the 1 minute crossing over the half hour here in just a minute. In 1 quick second here. $455.28. There's the tag right there. Looking across that right there. 450. That's the target right there, PT right there. Fucking draw it out with crayons for you. Watch out for squeezes off the hourly trigger and for a confirmation to the downside. I have a pretty ugly 5 minute candle here on SPX. Let me turn that shit off. Hold on. That's enough bear music for you fucking bears out there. Dirty ass bears. Oh, John Haggerty's bearish on Tesla, huh? You dirty, dirty dog, you. Yeah, if you don't follow there's two things. If you don't follow, there's a couple things here. If you're just tuning in for the first time, okay? If you're just tuning, people are doing the hype train right on. If you are just joining us, okay? You're new to this program. I'm gonna give you some. I'm gonna throw some stuff at you right here, okay? So our Discord. Here we go. I'm gonna give you guys. Hold on a second. In 1 quick second here. If you are new, whoever was saying, I don't know who said that earlier, but didn't see the name of whoever that was. But if you are new here and you're that person, get inside our Discord. Here's a free invitation for you to get into the Discord. Also, I want you to look me up on Google. It's CaptainJimJames. You'll find my Twitter handle. And then I also want you to follow me on a private handle called @CaptainsAlpha. I give you levels every day for your favorite tickers, including Tesla. Here, you follow me on this one right here. Can I do that right there? Follow me on @CaptainsAlpha, and I'll let you in between now and tomorrow morning. So you can get your free levels every day for Tesla, and then you can get inside the Discord and start talking to those people. And what else do I have? I don't know if I have anything else I can give you today, but I think that's it for right now. Those two things. All right. I love you too, RS. I don't normally. I want you also to know something. If you're new here, right? I don't normally like puff my chest out on social media. You'll never see me on social media sucking my own self off and stuff like that. If I win, I win. I'll like celebrate, but I don't like walk around Twitter or anywhere else and like suck myself off. Coming on down right now. See that fucking white PT down there? You want to know? You want to know where the future is? You want to see somebody from the future come back and show you where the fuck we're going? There it is. Sorry. Okay, so channel points. I have passed that off to my daughter, and she is working on it right now for you guys for channel points. She's going to create a bunch of stuff for you guys for channel points. So you guys are going to see that rolled out this week. But my oldest daughter is working on that for you right now. Yeah, you guys have channel points. I didn't know about channel points until yesterday. Somebody pointed it out. Get it to me? And dad joke. Bad puns from dad. So she's going to get some prizes for you guys and contests and all that kind of stuff for you guys to turn those things in. And she's going to order me. She looked into smart devices that are going to, you guys are going to be able to turn on music, and you guys are going to turn on the lights and off the lights and the disco ball and all that kind of shit. Disco lights that we have and whatever. Oh, yeah. You see that right there? Watch that come down. Come on down, baby. Come on down there. Come on, kiss it. Mwah. Kiss it for daddy. Watch out for a squeeze. That's right. Get that rage on out there, and then keep coming back to the live stream. I guarantee I'll make you think about me. You'll be at home and you won't watch the stream, and you'll be like, I hate that fucking asshole, but I got to go back and turn him on. I'm just not going to comment. Oh, yeah, go down there. Slap that ass down there. Yeah, that's right. You like that? You like them apples? I love you too, Darth Molly. Yeah, viewer-controlled disco balls. Oh, man. Killing me, these fucking disco balls. Crazy town. Oh, yeah. Oh. Ooh, yeah. Ooh, yeah, touch it. Oh. Can we break through it? I'd like to see us go. We have a little bit more we can go down. We can actually go down, get a little bit more we can go. Got a little bit, like right there we can go. Can go a little bit more. There's a little bit more gap. Tiny bit more gap on SPX to close out. Tiny bit of gap down there. Okay, let's move on. Yeah, viewer-controlled disco ball. Should I get like a vibrator that's plugged into the wall or something? You guys can turn the vibrator on or something like that. Something fucked up. Like what's the thing that that guys use? What's the thing that men use? It's disgusting. My brother had one as a joke, and when we were in college, he had one. He left it on his dining room or his living room table. What's that thing called? That fleshlight. Maybe I can get a corded. Let me look that up. A corded fleshlight or some shit like that. I'll post it up I'll post it on the picture of Tom Lee and our man. No flash. Yeah, I know women. I'll get like an old school. I'll get like a 1970 flashlight, like it's plugged into the wall, like an old school cord on it. It's all rotten and stuff. Sit on a Sibian. I'm like, can you imagine me sitting on a Sibian? You guys would be like fucking cutting the video and then posting it all over the internet. Like I'll keep my clothes on, but that should be funny as fuck. Sorry. Oh shit. Okay, so you got a little bit of this over here to clean up. See that little bit down there? There's a little bit more down here that needs cleaned. You see that little gray area down here? Take all that out, right? They got a little bit more down to go, so a little bit more down to go. We'll just keep watching it down here. Almost there. Put that pain trade on. A little bit more down to go. A little tiny bit. Tiny bit more to go. You know, there's something else here too, right? There's a this 455.0 down here. We can easily trade that today too. Can actually trade all this down here too, but you're likely going to see a squeeze up and then down. So if you're watching the bottom screen down here, they leave this here and they squeeze this back up. You get the cross up here, right there, and then we squeeze up and then head right back down right here. Trade the 455.0. We don't want to take the money and run here for a squeeze. We want to check up here for a squeeze. Matter of fact, I'm going to get the squeeze here. Hold on a second here. I'm long here right now. Long calls, not long puts. We might still get a blast down here, but we might still get one more big red bar down. But I'm looking for this kind of a trade right here, a squeeze up and then a reversal to the downside. Let's see what they do here. Your next target down below would be about $1.30. Your next target's right about there, right in there. Hold on here. So it'd be PT2. Down there. If it does go up, hold on here. Something like this, and then something like that. So somewhere in there like that. If price squeezes up here and starts to head higher, we'll take a second long up here for the upside. Got my finger on the fucking sell bar in case we do start to roll and not do the reversal. HYG parked on its 5-minute 27 EMA. It's looking to reject its 1 minute here in just a second. Dixie has a cross on it. We'll look to see if Dixie will go back up there. NASDAQ holding up just fine right now. NASDAQ looks great, by the way. At 16,015, nice magnet. It's been an area of interest for NASDAQ. 16,000. I gotta watch out for a big giant red bar to the downside. I'm panicky of this happening, like straight red bar down and then a tweezer back up, and a tweezer reversal up here. I don't want to get caught in that. I got some stops here. Or I got finger stops. Oh, HYG rolling down right now. Be careful if you're a bull. It's a pretty tricky place right here. Flat right now. Oh. Hold on one second. I want to watch this closely. Watch that SPX gap fill down there. Bottom of your screen, right-hand side. Look at that gap that's down below on SPX. Right down here where my cursor is. I'm going to switch it over to the 1 minute and see if we can still see it. We're really close, like really, really close here. One minute trigger crossing the hourly trigger here. It's pretty bearish. Watch out if you're a bull. I'm probably going to get stopped out and switch to puts there in just a second. I've got a 154p set up to catch this if we do roll down. I'll hit the buy button. Gap is now closed on SPX and SPY. Hold on one second here. Let's go. Squeeze up. Squeeze, squeeze, squeeze. Oh, uh-oh. They really want to rain this down, huh? They want that red bar of death here. I got some puts. I got a 454 P. Still sitting in some calls. One more penny, I'll get stopped out in calls here. Are you serious? Another gap over there? Left a gap behind? Now sitting on a split here. Sitting on calls and puts. Never got stopped out of calls. HYG in a 1 minute has a bear cross on the 27 and the 129. See if they're going to go up there and check that or not. Tesla just dragging right now. Tesla down. Let me go check Tesla really quick. You're almost down on Tesla. Here's your hourly trigger right here. Might get one more down move here on Tesla before you catch a bounce. This is Tesla. Look, this is the Tesla chart. Right there. Reversal going on right now. We just, if in the bottom left-hand side of your screen, if you look at SPY, we just tagged the pivot line. you look on the bottom side of your screen over here, see if I can show this to you here. Here's your pivot right here. This is your hourly trigger right here. Should be a little bit higher, shouldn't it? Should be slightly higher, like right there. Come on. Come on up there and squeeze up there. I'm going to move this over so you can see it better. Now, this range right here is going to be, can be from here to here. It doesn't necessarily have to squeeze this high, but there is potential to squeeze up and over and then roll back down over here. Remember, if you're a bull, you have 4 sessions left for your bullishness. You've got today, tomorrow, Friday. Potentially, you have Monday as well. We're going to get into that discussion here. We're going to do an intermission here in just a moment. And what I'm going to talk to you about is the expectations for December 1st, the JPM collar, and historically what it's telling you. And then what December will look like. Now, not traditionally. I'll say this about the holiday rally, right? The holiday rally. People like to talk about the holiday rally, right? And they'll say things like, the holiday rally starts after Thanksgiving. They'll say, the holiday rally starts in December. They'll say the holiday rally starts in January. And it's more of a joke than it is truth. Now, you can compile every holiday rally every year and deduce that it comes out when it comes out. But I'll be honest with you, every year, if we get a holiday rally, for Q4 and maybe potentially even into Q1 of the next year, the following year, it can be whenever, right? The holiday rally can be, the point that I'm making to you is that the holiday rally can happen at any time. So we're going to look at seasonality here, and we're going to chat seasonality. And hold on one second here. I'm going to bring up a seasonality chart. Hold on. SPX. We're going to look at seasonality, I think. Hold on here. And it's not really the best. It's not really the best. Here, let's talk about the holiday rally really quick. Let's see if I can switch over really quick. So if you go over to this is if you go over to this screen right here, this is SPX seasonality. We'll go through SPX seasonality. Let me see if I can bring up. Yeah, I can't bring up IWM, but what I want to show you here is this is current price, the light green. This is seasonality, right? What to expect. And you can see that we're coming into that point where we begin to roll down, right? So if you're like looking right here, we can begin to roll down into the beginning of December, right? You see that here? And then you get a late December rally up into end of month, okay? So I want to talk to you guys about this really quick. We're squeezing up right now on SPY. Now, I want to talk to you briefly about this. I'm gonna mute this really quick. So I'm going to mute my camera and all that so you can see it. Put that right there. Okay, so I want to talk to you about seasonality on SPY, okay? We're going to start with SPY. We should start to see, even if we go up and get an all-time high, we should still see some bearishness into the end of month, okay? So I want you to see that here, okay? I want you to look at this, right? And start to see, you got 4 days left, and then we start to blast down, okay? So if you're looking at this from the perspective of like the next 4 sessions or so, we can go up again, we can go down, but then you should see a roll into about mid-December. Now, if you go back over here into January, so if you look at the last sessions, right, of the year, we tend to begin to turn to the upside, right, into the end of the year, and then we have some continuation into the beginning of the year, first week, maybe even into the 30th session, first, second week, and then maybe even into the 33rd session of the start of the year. The only thing that I'll tell you here is that, the only thing I want to comment on this is, if you're looking to make this buy towards the middle end of December on SPY or even NDX, they tend not to outperform. If we get that, we tend not to outperform like you do on small caps in an environment where we're possibly going to cut or pause and cut rates. So there's that caveat. Cut rates, pause rates, okay? So if you're looking to sell the market into mid-December, you probably want to sell SPOOs or tech, okay? And then come in the middle of December and pick that trade back up again if you're more comfortable with that trade. I think your better trade is IWM or the RUT, right, for outperformance in that time period, but you can do whatever you want out there. And I think that IWM does better this year because of a pause or rate cuts. Now, saying all that shit right there, right, we have that looming 4,800 on the board. How do we get 4,800 if we're not going to follow this seasonality over here, right? So if we have this thesis, if we're like, okay, we're going to, so you listen closely. If you think that, if you're with me and you think we should begin to get bearish into the first of the month, December, right, and start to send this down into the middle of December, we are positioned for that trade, and we already know that if price stays above the hourly trigger, right? And you guys probably want to see seasonality for NDX too. I'm going to show you that next. Here's NASDAQ seasonality as well. Same thing, slow grind down and sideways, and then you get your end of the year move up. So if you think personally, if you're like, oh, or I guess if you think, hey Cap, I don't think we go down in the beginning of December, because people are talking about that, right? There's bulls out there talking about that. The only caveat that I would say to you on this would be, as long as price stays above the hourly trigger on both tech and S&P 500, keep trading it up to that 4,800. Okay, so if you're a bull, we're sitting right now on the hourly trigger. As long as we stay on this hourly or above this hourly trigger, you can still trade that trade, take that trade, trade that trade of we're going to 4,800 into the end of the year. Okay, so I'll leave you with that caveat. If we begin to reject off the hourly trigger, I want you to, if we begin to reject off that hourly trigger, right, we go below it, right, then I want you to, like, listen to me. If you're a bear out there, you already know this. If you're a bull, okay, if we begin to sell off underneath that hourly trigger into this Monday, get your fucking bear suits on into the middle of the month at minimum, maybe even the third week of the month of December. And I'm going to prove this point one more time to you here, okay? I want to show you one other thing really quick. I posted this on FinTwit this morning, and I want you guys to look at this, okay, with me. So seasonally, and the JPM collar, right, tells us something is amiss. Okay, so if we look at previous examples, now this is history, right? Not guaranteed. History doesn't guarantee anything, right? But if we can see a pattern of any kind, we can see that if we break above the top end of the collar, we tend to come back down into the end of the collar, right? To the downside. Same thing up here. We break above the collar. And then as we come into the end of the quarter, we come back down into this collar, right? Same thing up here, right? We break above the collar, we come back down, and we actually went below, but we went right back up into the top right there, right? Came up to the top of the collar, came right back down to the end of the collar, right? We didn't get above here, but look at this one. This one, we're above the collar again, right? So if we're above the collar, right? If we're above the collar, doesn't mean we can't continue to go up here. It just means that as we come into the end of the quarter, that we tend to come back to this collar. So, and that collar is 45.15. So if you're looking for a price on the end of, if you're looking for a price for the end of the year, it would be a fair assumption to say, hey, I looked back on the last 4 collars where we were in this situation, and we came back down into reality into the end of the month. It doesn't mean we can't keep going up right now, but it does mean that you should be looking for this trade down into end of month, end of quarter. If we break below where that trend line is, right? Let's say we do that right there. So let's say we do something like this. We squeeze up, maybe get another day or two of up, right? Then we come back down and blast down into middle of December, and then there's your holiday rally right there. Whoop, into the end of the year. You see that? You see what I'm saying here? So this is the probability of what's going to happen. Is it guaranteed? No. Can we go up to just start ripping up into 4,800 at the end of the year? Sure, but it's unlikely. The more likely path is going to be that we go up here to 4,600, come back down, try to do a squeak out. There's your Xmas or your holiday rally, right? And then maybe you get that first few weeks of January and you hit your 4,800 up here. Does that make sense? So just be conscious of this as the rest of the year plays out and into Q1 of 2024. Then you get your 4,800 and you get your front running of rate cuts and all that kind of stuff. Another caveat to understand about this is that we have a Fed rate decision on December 11th and 12th. So we have a Fed rate decision on December 11th and 12th. That could be something where you get an actual rate increase and the market goes to the bloodbath, right? You get your middle of the month December and you're good to go. If you get no rate increase in December on 11th, 12th, that would be the 5th no rate hike. And I'm going to tell you right now, that is going to be, if you don't get a rate increase on December 11th, 12th, historically, we do not ever raise rates again. So if that's the case, you could then see that be the trigger on the 11th to squeeze up to that 480 for liquidity to sell a roll that should come in about 2 months. It should take about 2 to 3 months to front run the end of rate hiking. And you would see the Fed chase that with 2 cuts into next year. It would probably take about 2 months to get that roll down started. That would put us into February for a nice February dip, and possibly even for one more roll down into April for that last dip, which is, again, seasonally the lows of the year. So even the JPM caller is setting you up and telling you to look forward to a down middle of December. Okay, so that's also back. Oh, hold on a second here. Shit. I wasn't paying attention. Fuck. I'm still in puts, but I got I'm cutting my calls loose right now. I forgot to cut my calls loose. So, are you guys at least tracking this right now? You getting the gist of this? Let me know in the chat if you're at least understanding the gist of this. That you're going to expect. Sorry, I meant to sell this shit out over here. I wasn't paying attention here. Let me put this back up here. See if we can go back down and tag this. Still sitting in puts right now. I only lost 2 pennies, so I'm not too angry. So the idea here is that you're going to expect, okay, weakness in the market below the hourly trigger. Binky, if you're watching this program, I want you to cut this section out right here. You're going to expect heading into the 1st of December, into the 1st, like after Monday, or I think it's Monday, right? I think it's Monday. Make sure I got all this shit right here. I'm just blabbing away and I'm not, You're going to expect as of Friday, you might be given that last day for month. You might be given that last day because the 1st on Friday, it's the end of the week, right? But I would expect for weakness to begin on the 1st, possibly Monday instead. And I would expect that weakness to last into about the 11th and 12th for Jerome Powell. There is a caveat. Price needs to be below the hourly trigger. As long as price is below the hourly trigger, that is a valid statement. If price maintains above the hourly trigger, we will continue to trade it up in the short term. No big put spreads, no big call spreads, just day trade it, day trade it, day trade it. As long as we stay above the hourly trigger, we'll just chase price to the upside, right? But if we break that hourly trigger, you're going to say to yourself, expect to be weak into about the middle of the month of December. And then when we come into that Jerome Powell rate decision, right? We're going to listen to see what he has to say. And if he gives you a rate increase, you're likely going to get some short-term blood in the marketplace, 2, 3, 4 days, something like that, and then you'll get your end of the year holiday rally. If Jerome Powell does not give you an increase, there is a high probability that the market will seek out liquidity to the upside. That could give you that 480. And we just squeeze, like massive squeeze, like insane squeeze to grab the liquidity to front run cutting rates in the future, knowing that we've never, ever not raised rates for 5 decisions and ever raised again. Does that make sense? So you look for the liquidity up on high and then start to sell it down into February and April of 2024. Oh, shit, I still got puts on there. I should have left the calls on. I was panicking there. But maybe I should have been doing what I was doing before, blabbing before. I gotta stop trading while I'm blabbing. I'm not paying attention. So you guys got the gist of this, right? Tell me in the chat. Just say, yes, Captain, I have the gist of this. Or, no, Captain, I don't understand what you're talking to me. I don't understand what you're saying to me. Let me know in the chat right now if you do not understand. How about that? If you don't understand, say that in the chat. What is the hourly trigger? It's on a tool that we have here. We've given it out to about 80 people, and we're going to give it out to 80, 30 or 40 or something like that. We're going to have it available for you, I believe, this week. So if you want access to it, you can really get access to it very soon. What do we got here? Coming up on the bottom of the hour, picked up SPY, safety hedge. Silver collection to be buying puts for years and as a decent risk return bet cap. Yeah, what I'm looking for into the 1st of December is price to be below the hourly trigger, which currently sits at 455.68. As long as we get under that hourly trigger, we'll start selling the market down. We'll look for like a 2-week out fucking put, and we're going to try to run this shit down into Jerome Powell's rate decision. You guys all got it. Okay. You guys all understand seasonality. You guys all understand. You guys might not at this point understand the mechanics of rate pause and rate cuts. We'll go more into depth of that today at some point. I'm going to show you examples in the past where when they cut rates, they front run a big move to the downside, check to the downside. So we'll look at that later this afternoon. So that's what you need to know about SPY. Now we're next going to go into when we get into the middle of December. Why do I want to trade small caps and not trade? Why do I want to trade small caps and not trade tech or SPOOs? And I'm going to show you that here in just a moment, okay? Give me one quick second, and I'll show you that in just a moment. Hang tight 1 second here. Now, I'm not affiliated with this guy in any way, shape, or form. No affiliation with this guy. This guy doesn't pay me. I don't know him. Hold on. Matter of fact, I'll just tell him that I'm going to send some people his way. Hold on. Let me see if I can. Let me see if. Hold on a second. Give me one quick second here. Hang tight 1 second here. Let me see if I can find this guy. Oh, there he goes, right there. I'm following him right now. I am following him. Hang tight 1 second here. I'll find this for you. Right here. See if I can bring this up for you. All right, so this is the from Trader's Almanac here, right? And what I'm going to show you here is, well, this is where are we at? We aren't actually here right now. We are right here. We are right here, right? Almost. So you're going to look for a dip buy on small caps. They should outperform into the middle of the month of December. So if you're not a bear and you'll just like to buy the dip, small caps should outperform in December, right? Whereas SPY and tech should bleed. You should be dumping about the middle of the month of December, small caps, and then you should come in right in the middle of December. And remember when we were talking about, or I was showing you earlier, the seasonality maps of SPY, SPX, and tech. If you notice here, this should outperform into March, right? See March over here? The entire first quarter, IWM should outperform the market into that. This is the Q1 right here of 2024. Okay? So you should see, ready for this? First week of December, small caps outperforms, right? Middle of the month of December, small caps long trade into March. So if you're like, well, I want to wait for the JPM collar to come out first of the year, you've got an opportunity here to long something into March. Nice call spread, right? Something way outside the money, and you run this bad boy all the way up. And we'll look at this trade we'll look at this trade in the middle of the month in December, right around where JPOW gives his decision. Hopefully we can get some weakness on the 11th and slam down IWM into like the 15th. Hopefully you guys will be here on stream with me, and you'll be crying and, oh my God, everything's going to crash. We're doomed, Cap. And we're going to be cool, calm, collected. We're going to go into IWM. Small caps are going to place a trade. And this would be a kick-ass trade and this is all January effect. You guys know what January effect is, right? This is tax loss harvesting that goes on for the January effect, starts in mid-December, right? And we'll take this trade into March. Okay, hold on a second here. Into March. Hold on a second. Go back to the main screen here. And we're going to be looking for outperformance here. Outperformance. Move that over here. Oh, let me read what you guys are saying right now. Hold on. Hang tight here. I'm trying to read the chat. I can't read it all. All right, so you all have it here. Too many big words, but I'm good. Hourly trigger stays the same on any time frame. It stays the same on 30 minutes, 1 minute, 1 day. Doesn't matter. Mike Blurry saying quad witching on the 15th. Good job, Mike Blurry, right? Right around there, that quad witching. Which small caps am I going to buy? IWM. IWM. That's what I want to buy. I want to buy a call spread on IWM. It's already shitty liquidity on IWM, and it's like watching paint dry. That's the one thing I'll tell you. If we take this trade, don't fucking look at it. You take the trade, and you just like take it on a fucking account that you don't look at, and you set an alarm on Google or an Apple, and you go, remind me on March remind me on March 30th to check that trade that I have. And you don't look at it. You go out in your bunker, chain yourself to a wall, and you look for the outperformance from IWM small caps in anticipation of some kind of pause and rate cut. It's into next year at some point. Oh, fuck yeah, it is. PT2 is still, you guys don't see it here? Right here. It's right there. Fuck yeah, it's still in play. The only way that this doesn't stay in play is if price does this. The only way that doesn't stay in play is if you get above, or you guys can't see that. If you get above this previous high, and then this right here. That's what you'll be looking for. If you, this is the secondary. So you'd be looking to breach this high right here. Right there. Just get above it by a C here. You want to get above, you want to get just above right here. Any failure of that is bearish. Like if we squeeze up right now and we fail this high and we fail that high, like we fail it right here, whoop, we're going to go straight down. If we go up here and we fail that one, whoop, we're going to go straight down to the and bloodbath it to the downside. I've explained this on stream sometimes. We have a video, an educational video on YouTube about how to figure this out. As of right now, we're just looking for a rejection for more downside to come. That's why the split is on right now. Yeah, you know what's up. You know what's up. Okay, so you guys all understand all of this so far. Okay, good. I did post and pin this concept on my Twitter handle. So if you go to Twitter, I've got it pinned right there. You can just review it right there. Everything I just went over here with you, I just posted a very simplified version on Twitter. It's like crayons. You can just read it. It might not be the exact date, but in and around there, you should see those actions take place. So I did post it on Twitter for you. It's very simple. I will trade this with you, so it's not like you're going to have this information and not expect us to be looking at this in the future. As we approach those dates, as we approach the 1st, the 15th, the end of the month of December, and then we come into the new year, I'll keep you updated. And when we go to the Jerome Powell's rate decision, we will adjust those plans based upon what his rate decision is. As a matter of fact, let me ask you guys, do you guys think that we're done raising rates? I won't even ask that. Do you guys think that we're getting a rate increase in December or not? That's the big question. Do you think we're getting a rate increase? I'm just going to get rid of this right now. We'll put that up later, only if we get above that red bar. And we'll put that box up there. It's right there. How probable is the chance of more downside? Until we have a formula for this. Until that thing right here turns green, see that positioning? See how it says short? Till that thing turns green, only then can you take a long call with confidence. Like a high probability. It's the only time you can take it with a high probability. Like a like this, I won. I have a video that goes over how you know if you're like, so there's like a 30% probability here of being right as a bull, like because we're above the 1 minute trigger, but the probability increases to about 70 to 90% once that box turns green. PSTG. Hold on a second here. PSTG. You guys have any other tickers you want me to look at? We'll look at GME here in just a minute. Let me see what you guys are saying here. I'm missing some of what you guys are saying. Rivian. I'll do Rivian right now, RIVN. All right, that's enough. UPST. That's 4. I got 4 tickers. That's a lot. Let me look at YouTube. Anybody got a question or any guys have requests on YouTube? If Fed does raise it, does that mean the Fed would keep more control? It's a good question, Stacy. So if you're a bull, historically, if you are a bull, right? As long as we raise rates and hold and raise, or I should say that, let me rephrase that. As long as we raise rates as a bull, we should trade sideways and up with normal pullbacks. It should look like this. This is what it should look like. Just like this. Grind, pullback, grind, pullback, grind, pullback. As long as we're raising rates or holding with the potential to raise rates, we should do that. Historically, if the banks know that they're going to cut rates, not you and I, if they know that we're done raising rates, which we don't know, right? We do have some historical things to look at, which historically, if they don't raise a fifth rate decision, they never have going all the way back to 1890. They never have. So we're gonna rely upon that to say if they don't raise rates, we're likely done with this rate cycle. So if we're done with the rate cycle, traditionally what happens is we will get a liquidity grab, and then over the course of about 2 months, we will start to trade down and test a bottom, find out where bottom is. And I will show you that later today, those historical examples. Now, the question of if we're going to raise again or not. The question of if we're going to raise again or not. If you're going to buy calls here, by the way, I'm going to give you a second, a yellow bar up here, I guess. We can do a yellow one right here. Oop, right there. Make that one yellow. If you are, or I'm going to show you historically how that front running happens. Price will matter on that as well. like if are we above the January 2022 the January 22 high? If we just go back and check that, or if we fail to make that high, we should go back down and, believe it or not, revisit at least the 3,500 or so. Right around that 3,500, we should go back and revisit that if we failed to make the new high. Is it possible they've been doing that since the end of October? Traditionally, no. If you guys know anything about Wyckoff or Wyckoff, we normally have a trough, and we'll go back and revisit or check that trough or go back into that trough one last time. Good question, by the way. As a matter of fact, in 2001 and 2008, when we did that, we made a second leg down. It's the only the only other two examples outside of those two examples would be World War II. No, that might be it. World War II, I think, was the last time we had that example. No, the Great Depression. I apologize. 4 examples in history of having that check go all the way down to the trough is normal, and then the second leg through the trough. That'd be breaking below 3,500 and getting like 2,800. And you know something cool? If you have the tool at home, you guys want something cool? If you have the tool at home, right, we can actually predict where those targets are if we get there. We can actually predict the breaks and where we'll go. I'll show that to you right now if you want to see it. Ooh, yeah, baby. Squeeze it. Squeeze it, squeeze it, squeeze it. Bears want to hold this right here. If they can't hold this, if bulls do not, or buyers do not have the wherewithal to come up, you'll see this fail, and we will reverse to the downside. Sometimes we give a quick squeeze and then an immediate roll down. If bulls if bulls are still demanding here, and we come all the way up here and we actually get above, you will see us start to consolidate here, and I will get bullish again, and we will see that bull cross up here, and we'll take a long over here. You're getting the tool. Matter of fact, let me ask someone here and see how soon I can get. Supposedly I can get the tool out right now, so. So let's show that to you right now. Nope, I gotta show this over here. Extend that. This is the magnet at 545.75. Oh, Rocket Lab. Okay, I was trying to check to see if anybody on RKLB. I was trying to see if any of you guys really want. I was trying to see if any of you guys really want a bunch of tickers done. So I'll do those right now. Hang tight, real quick. In one quick second here. Trigger screen. PSTG, Pure Storage. It looks like their market cap is good. 30-minute chart. It's good. It's good. Daily chart. I like the ticker. I like that it's a. I don't know anything about what their ERs have been, but I'm going to assume they're good. They're getting a little long right now. I'll tell you that. They're a little bit long in the tooth here on their weekly. Their monthly, there's a little bit of selling going on in the background that you can't see. You can actually see it right here. They're selling out, but it's still not bad. This should still come up. This should still come up right here. You still have bullishness likely for multiple weeks. You have some highs back here to check. I want you to check this one out right here. You got some highs here to look for, highs here, and also right here. And likely some kind of a move up in here. right there, you can see we'll have a little bit more to go. So bullish here on PTSG. Price target $50. Right there, price target. And I'm going to expect a big pullback on that trade. If you're looking for fundamentals, I'd have to check out their fundamentals with you or on the side and see if they're beating all their ERs and that kind of stuff, if there should be some continuation. I'm going to assume that they have year-over-year good sales, that kind of stuff, quarter-over-quarter. They're probably, I don't know who this company is, Pure Storage. I'm going to also assume that they're making hand over fist money. They're not in development or anything like that. So I think I might have heard of these guys. But anyways, the point on this trade would be if the buy-in down here was at $10, I would expect a markup of 150% to 300% on this company, on Pure Storage. I don't know any of their fundamentals off just talking to you guys about it, but the initial target would be that $50 up here. And as long as price stays above, let's talk about price really quick, or where to buy the dip for this run. Let me just check this really quick. Yep, you're able to come back down there. They like that monthly trigger. They like that monthly trigger. So price target right now. On here. Give me a quick second here. Price target right now on this ticker. Hold on one second here. Bullish to $50 right now on this ticker. We'll go back and review this one. I do want to say something to you though. If at any point you break below $35, $35, you will see a revisit to the monthly trigger, which is way down there. If you see a break at any point of $35, you have a high probability of going all the way down to $30, way down there. So trade is dead under $35. That's PSTG. Next one we're going to look at is GME. So GME is coming into its weekly trigger. If you are a bear, so see GME up here trading up into its weekly trigger. I'm going to expect a big sell here. Right here. And we're going to come back down to $15. So if you're a GME bull, automatically I'm going to expect a roll here on GME. Whoop, come over here and start sending this down and then pick this back up on the hourly trigger. That's at $15. And hopefully this daily trigger will help you out. If at any point GME breaks below $15, the trade is dead. So I know, don't tell me about how much you GME is going to fucking $1,000. So if at any point you break price below $15, we're gonna start heading down again on GME. Okay, so be very careful here. As a matter of fact, I'll show you here all the examples of what happens when you get too greedy. This stuff right here. You want to see where that monthly is? Way up here. So that pullback on GME, if you're super bullish here, right? I'm going to expect the squeeze up, pull back, catch the daily trigger here, the hourly trigger, and then your next target is $25 up here, okay? So right now, GME, I'm going to do, here, I'll draw this on a better way. Squeeze it up, back down right here, come back up. Your target is right up there, $25, $22, something like that. That's GME. Next one, Rivian. RIVN. Ooh, this one's nice. Ooh, this is juicy. We don't want to see that ever again, do we? I like this one. Good job on Rivian. Very bullish on Rivian. As long as Rivian holds 17.27, price target $19. Let me check the velocity on it, see if it still has it. Where is its monthly? I thought its monthly was higher. Maybe I might not have a monthly to it. Hasn't been. Hold on. Put this on a daily chart here. I don't think you have. Do you have a monthly up here? Yeah, you don't have. I don't think you have the time for a monthly up here. Yeah, you don't have the time. You have the time and market for it. Very bullish. I like Rivian here, even right now. This nice tweezer with a 30-minute candle, 30-minute reversal to the upside. I shouldn't do that. That's wrong. You should see, you got the first push down right there, and then you should see something like that. That's more what it'll look like. Or it should look like. You should break this right here. Whoop. Get a new high. Very similar to Tesla, right? Where it's just pounding, 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 and then whoop, all the way up, and you hit the $19.21. I like this is my favorite one so far. This is not my favorite one. I think so far I like PSTG. Actually, I like GME and I like Rivian too. 3 great tickers. Good job, Bulls. If you guys are out there calling those tickers out, good job. UPST, this is an old favorite over here. We've traded Upstart. Let's see what they're saying. I like Upstart here too. See how they're well, first of all, see how the weekly's coming down. That's bearish. See how they're selling off the weekly like it's nobody's business. Back down below, back down below. Daily is still bearish. So daily and weekly are still bearish on you. On Upstart, you have these sellers coming in up here. Let me check it on a daily really quick. I'm bearish on Upstart. I'm bearish. Overall, I'm bearish on Upstart. So this one here, I'm bearish on. Give me a second here. I'm bearish on this one. One more failure up there. Oh. Holy shit. I think you got bad news coming. What was their opening price when they opened? Can whoever asked me for this ticker, do you have a do you know what the opening price when they first launched was? Still bearish on Upstart. Now, there's a caveat on this. $17 target. Right there. Still bearish on this. If you are not bearish on Upstart, and you're bullish on Upstart, I would really like to see. I'd really like to see if you think we're done with this bearishness on Upstart. I'd really like to see it spend some time down here, and I'd really like to see the daily trigger start to cross the weekly trigger to make it more permanent. And I'd be interested in longing it like right there. To even begin to think about closing out all this stuff back here that you're looking for. It's like all that, like I know you want to close this gap back here. You have no discussion about this stuff until you get above and hold. So see this right here and this right here? You need to actually get up, whoop, and then start to beat out these previous highs to even begin to get bullish. You can get bullish, but not right now. Velocity is saying you're not done going down. Velocity is saying you're not done going down. So UPST I'm bearish on. Rocket Lab. Unless something changes, I wouldn't get bullish on it. Now this is what I like to see right here. I like seeing this. Let me check the daily on it. Yeah, mixed bag on Rocket Lab. I like this ticker trace to trade this. I like this consolidation here. There's a question mark on this ticker. I love this here. Of course, I don't like that. I don't like that we break above the daily and then we immediately sell down. This is called back checking, by the way, if you don't know it. You come back up, back check it again, and you're coming back up and testing it again right now. So this is positive-ish. Your weekly on a 30-minute time frame looks great. Or excuse me, your daily looks great, so that's good. And I like that you're trying to hold it more than back here. So this is all positive for Rocket Lab. I'm going to go more neutral on Rocket Lab than negative. And you just confirmed here. See how you just confirmed this hourly trigger? That means your run is not done yet. So short-term bullish. Short-term bullish on Rocket Lab. And hold on one second here. We're coming into R1 right now in SPY. So I'm bullish on Rocket Lab right now. But I do want to say to you that it's with reservations. It's with reservations. So just up in right there. Short-term bullish. So I'd really like to, because you had that confirmation, that's pretty bullish. I'm going to expect that right there. And then I'm going to expect you to have a move to $5. And I'm also going to tell you something else. You're likely going to see a time frame or time period where you go up here and you bounce around. There's a high probability of you doing this shit before you can start attacking upside moves. So I'm going to expect once you hit $4.92, you're going to get some consolidation. Hang tight. I gotta manage a position here. I'm gonna expect some consolidation in this time frame. This could take you a month or two, and then we'll talk about going up and then messing with this. Yeah, you can see it back here too. You can actually see it in previous price. Right there. You got a little bit more trouble in here. Could possibly get up here. I'd like to see that. I'd like to see you get $5.50. That's what I'd like to see you get. But then I'd like to see it come back and consolidate, and then you get your next big move up. So $5, $5.50, or $5.50, and then the big boy comes. They come back down here, consolidate, and there's your $7 right there. You can actually see it. It's right there. Whoop. See it? And then you get your $7 right there. Bullish in the short term, next 1 to 3 months. If at any point you break below hourly trend, which is right here, if you break below that hourly trend, you're going down. Oh, hold on here. If at any point you begin to break down below, like this, you'd expect more blood, at least to right there. Are there any other lower lows that I can see here? That's pretty much it, dude. It's the bottom of the fucking barrel, huh? Maybe you go back and retest that bottom of the barrel. Maybe you go to the depths of hell. Bullish. Tentatively bullish on Rocket Lab. Tentatively bullish to $7. I got some calls on right here. Losing my voice here. Let me drink some coffee and some water. Oh, what just happened here? Hang tight 1 second. Nice buying power right here. You want to be watching if we get the new high or not. Put that right over there. You guys can see all that right there. Well, they're going to test this cross right now. Let me read what you guys are saying. Nino, what are you saying right now? The problem with Rivian is sellers seem to have a large cannon they can fire when they want to. Drive it back down. They really do not like it near $18 on Rivian. We'll check back, Nino, and check Rivian for you. I'll tell you that where I showed you that hourly trigger, if we get underneath it, that's your run is done. Coming into a band right now on Bookmap of supply here. See if the buyers are stronger than the sellers here, if they can squeeze this up, or if they get rolled down, or if they just get rolled and we head back down to the downside. It's kind of the place right here. You're going to find out what happens right now. This is the are we bullish or bearish? You want to see a back check on, you want to see this cross right here, and maybe a back quick liquidation break, and then a push higher. Move that over for you. Hey, you're welcome, Stacy. If I can get to PLTR and AMD, I will. You know what? A lot of these tickers you guys are talking about. I want to talk to you guys about something. So a lot of the tickers that you guys bring up to me, what I would recommend that you do, right, is I want to tell you guys something. The reason I'm bringing this up is nothing negative or anything. When you guys are trading tickers like AMD, okay, they're a really good example, and we just had an example of AMD. I think on their Q2, I think it was AMD's Q2, but correct me if I'm wrong. But I think it was Q2 or Q3. It could have been Q2 or Q3, maybe Q2 of this year. I think it was AMD. It was either AMD or it was, I think it was AMD. It's like AMD, I think, sold off on their ER report. It's either AMD or it was I forget, NVIDIA, but I think it was AMD. I think what they did was they sold off on their ER, and then like 3 days later, they announced AI. Remember that? I think it was Q2 or maybe it was Q1. And then they just fucking went to the moon, right? Like, boom, to the moon. They're a good example for what I'm trying to say to you, but more to the point would be this. A lot of the tickers that I get requested on this show are tickers that usually run with the market. So if you're asking me to chart something for you that trades with the market, it will likely continue to trade with the market. It's why it makes up the S&P 500, the NQ, NDX, right? It's why it makes up the NASDAQ 100. So I want you to think about that, your favorite stock. So if your favorite stock is trading with the market, right, and you're trying to trade that individual ticker with the market, it's kind of pointless, right? So I'm going to give you 2 points here. The first one would be, why bother trading individual tickers and taking on that individual risk when you can trade an index and beat everybody else with just investing in an index? Does that make sense to you? So if you are trading one individual ticker, right, that trades with the market, you might as well take the risk off and spread that risk around many tickers. Does that make sense to you? Hopefully it does. Okay. So if you want to trade or have an edge on the greater market, like have an edge over SPY or have an edge over IWM or have an edge over the Qs, what I would recommend for you to do is something that Winky does. And what Winky will do is he will, every morning, I don't know if it's every morning, but frequently, what he will do is he will watch companies that don't deserve to sell off. that are a part of the rest of the market. So an example would be this. If Qs are going up, right? And one day of that week, you see AMD trade against the S&P 500 or the Qs, you should show some interest in that ticker to maybe buy that ticker on a low, unless it was something fundamentally wrong with that ticker, even if you have to wait. So if you want an edge to beat the market, the greater market, in every morning or once a week, maybe every Friday in the morning at 8 a.m. you get your Cheerios out, you get your grape nuts out, you get your cocaine out, you do whatever you're going to do, and you review tickers that are part of the S&P 500 or NASDAQ, big players like AMD, or even small players, and you look for tickers that are unusually down, and maybe you pick those up to trade. The reason I'm making that statement is because if you and 10 other people ask me to chart out 5 tickers that follow the greater market, I'm basically charting out the same ticker, aren't I? So, and if you want to beat, there's no reason to want to trade that ticker individually unless it's outperforming Qs or outperforming S&P 500 to gain an edge to beat the S&P or NASDAQ. So my recommendation here would be to have some kind of a tracker out there for a ticker so that you can beat the market. On the inverse of that, some tickers do beat the market, like NVIDIA is beating the market performance right now. It's even beating the Qs, right? Some of the Magnificent 5 and 7 are doing the same thing. The other thing that I would say to you would be, rather than trading those individual tickers and just saying, fuck the SPY or fuck Qs, and you're like, I don't want to do that, I like these companies and stuff like that, wait for them to have some kind of bad news where the rest of the market's going up and it's going down. And on the other side of this, too, would be we do a stock picking here, and I'm always looking on down days for stocks that are still up on those down days. And if those tickers are still up, so I want you to know this right here. So you're going to see this back test on this bullish crosshair. So you're going to see this test. If this test is successful, we should squeeze straight up. If the test is not successful, we're going to roll this shit straight down to the depths of hell. So the idea here would be this. If you have a basket of stocks that you like and they trade with the market, wait for a bad day or a bad week for that ticker. And if they have nothing fundamentally wrong with them, try to pick those tickers and not just, hey, everybody's trading this or everybody likes this or that or whatever. The other caveat would be that one ticker we looked at, I believe it was PSTG, outstanding ticker to be trading. It's probably it looked like it launched in under 3 years. It looks like it's being accumulated by hedge funds regardless of market conditions. Those are great tickers too if you want to beat with spec growth the general or the greater market. Does that make sense? Yeah, a vulture trader. And Winky does the same thing. So like Winky's a good example because he's like, well, why bother trading individual tickers if I can just buy the SPY on a major low, right? I have greater exposure. I have less risk if Meta dies one day or if Tesla dies one day, right? I can just spread the risk around. But if you really want to make a dent, you really are looking for those the symbols that make up, or the tickers that I should say, the tickers that make up that index, and wait for it to have some kind of a like falling out for a week or two or a month or whatever. And you buy that ticker on the lows. You buy them when they're down in the dumpster fires, and you will then outperform the greater market. Make sense? Okay. Yeah. It hasn't been happening a lot recently, but it does happen a lot. Oftentimes, I get people ask me the same tickers, like, "Hey, can you chart Apple? Can you chart Misfit, which is Microsoft? Can you chart can you chart I don't know, Google or any of these other tickers?" And I'm like, "Yeah, they're all trading the same. If I fucking overlaid their chart, it's probably the fucking same." And when they're not the same, that's when maybe we can compare a couple of these charts. Maybe we should do that. When we're done with this right here to see if we squeeze up, we should squeeze right here. We actually defended it. We had a successful defense right here. If your inputs, get out of them. You're going to get squeezed out. Likely, we're going to squeeze right up here. I don't. Well, maybe I should overlay the Magnificent 7 or 5, and you can actually look at how they track the market, but then how they have blast downs, and that's when you should have bought those tickers individually. Fuck yeah, man. Squeeze this shit up. Squeeze this shit up. Squeeze it, baby. Squeeze it. Give me a squeeze. Big fat green bar. Come on. Dude, give me a squeeze, dude. Big fat fucking giant green bar. Oh, don't do this. Come on. Stop dicking around. All right, I guess we'll wait. We'll wait as this shit drags on. Yeah, maybe we should do that sometime. Is maybe we should look at like all these stocks over like AMD's, the Fangman plus T stuff, or I guess it's Mangman plus T. And if you look at maybe we can compare those 5 or 7 stocks to the greater market, or 10 or 20 stocks, and then look for bloodbaths in them, like individually. And you should actually have been looking to buy those. And I'm not talking about all of them going down, just when the market's going up. You see that one stock get hammered. Should you have been buying or if you want to beat, should you have been buying NASDAQ, or should you be buying those individual tickers to beat the Qs? Fund companies like PCT. Looking for a squeeze up here to tag this yellow and red bar. We have looks like a successful defense of a bull cross right here. This is all looking pretty bullish right here. All this successful defense. You've got the cross of the 1 5 minute, the half hour. You have about a 2.5 trigger push right here. Squeeze this up here. If you're a seller, you're likely going to get squeezed here. High probability of you getting squeezed out. If you're a seller from up here, you had no problems right now, but there's a squeeze likely coming here. About a 70% chance of a squeeze going up. We'll sit here and wait for it. Fucking bears are like, fucking sellers are like, sell, 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 sell. Let's check SPY and see if they're up here. Yeah. Look at a 5 minute on SPY, see if they're going to try to sell that. Yeah, this yellow bar is higher. This thing is, where is that? Right there. That's where that yellow bar is. If you're looking to take this trade, you're not in calls already, you might possibly get a liquidation break, but it'll reverse straight back up again. Or it should reverse. If it does, you can jump on a trade. Might actually, hold on a second here. Might add some calls here. VIX coming back up to test its 27 EMA and a 1 minute trigger here. Let's see if it gets a rejection to the downside. Apple just messing around here, not doing much. Dixie bloodbath and still. NDX coming back down to check its 27 EMA on a prior bull cross to see if it can squeeze. Tesla just hanging around. Tesla with a nice bounce on its hourly trigger. Any guys going to buy call spreads on Tesla for tomorrow? This is likely it on your hourly trigger. Likely the place for you to get some call spreads for tomorrow. That's your support. You put your stops underneath it. That's how you get your risk on and you manage your risk. Do, 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 do. Oh, hold on. That's stupid. I wish they had arrows on these things. Do they have arrows in this thing? I don't see any. I just see polylines. We've turned bullish here. If you want to see that right there, we're turned bullish. Oh, so John Haggerty is giving us some pretty big knowledge here. He just dropped in and said, look at percentage change losers, public scan, and think or swim for vultures. Thanks, John, for putting that out there for us. Yeah, John, I like that. I like that. You know what else? You know what else Winky does that I really like is he does the Winky does those scans, and then he also does when they have the downgrades and upgrades. He does the. I should clean that up. He does the he compares that stuff with upgrades and downgrades as well. And I like that methodology. Are they gonna squeeze this shit or what? Come on, man, squeeze. Fucking dealers, dude. Come on, dude. Squeeze it. Close the gap, dude. Get up there. Close the pivot. They got a gap down scanner on Thinker. You know, it's weird, John. I haven't. You know what? I got pissed off at. Oh, two things. I'm pissed off at Tasty right now. Tasty wants me to start a new platform. I don't want to do that. I'm upset at their. I'm also upset at Tasty's order flow. It's been getting worse the past year, and I stopped using Thinkorswim the past year. I got upset at Thinkorswim because I built a volume and market profile. And twice, and it deleted it. Either I deleted it or they deleted it or something like that. Oh, yeah, 457s, dude, right here. 457s are nice. 457s trading 24 cents right now. See if they can trade this up and trade 50. Not 50, excuse me. See if they can trade 30 maybe, 33, something like that. If you're looking for a trade. Parked on R1 right now. On SPY. Back checking a third time on the 1 minute trigger. Keep your eyes on the hour. It's 12:56. We got 4 minutes left for these bears to get a new low in the half an hour. If they don't get the new low in the half hour, the bulls are going to take over likely and send this thing to the moon. So bears have 4 more minutes to get a new low in the half an hour. Four more minutes. I'll be here with you. I'm gonna drink some coffee. I'm gonna drink some water. My throat's killing me. I wonder if Miro's here today. Miro's like, Miro's like right here. Miro's like throwing boulders down. Like oh, I'm drawing that wrong. Miro's like, fuck your calls. He's not mad. He's happy. Is that happy? I don't know. He's got his arms over his head. Got the boulders up here. He's like, got boulders in his arms and trying to throw boulders on this. Oh, and I gotta see if Miro's out there. I gotta talk to Miro. Hang tight here. I gotta see if Miro's okay out there. Did he get off Twitter? Or is he still on Twitter? Where the fuck is Miro? Is he not on Twitter anymore? Did he get off Twitter? What? Dude, where the fuck is Miro? Is he not on Twitter anymore? Oh, there he is. Oh, yeah, he's on there. He's doing just fine. I just said I just made a post on Twitter that said take the hedge off, damn it. Give us 20 minutes. Oh, dude, wait a minute. Oh, dude, he's not on right now. Where the fuck did he go? Anybody know if Miro's okay? Hold on, I gotta message him. He looks like he might not. But checking on him. I just sent him a DM. Oh. Oh. Let's buy some fucking calls, man. He did say something today. I just looked at his profile and I don't see anything on his profile today. His profile's dead. It's like super quiet. He's got no posts, no replies, no nothing. Ooh. Did I buy this 18 cents here? Do I buy this? Do I buy this? Not yet. Not yet. Yeah, maybe I should have bought that. I didn't buy that there. I got 2457 C's. Small position here. Yeah. Oh. Oh. Ooh. Oh. 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 I'm down 2 right now. Fucking angry, dude. Look at these guys. These fucking sellers are angry right now. Angry sellers here. No, they don't want to see the squeeze. These guys are dicks. Dicks. Look at that reversal candle right there. They are pissed off right here. Someone's coming in to sell the fuck out of that. Bam. Fuck you. HYG still climbing to the upside. Dixie. Yeah. Reversal huge. Let's say look at an NDX on one. Look at an NDX on a 1 minute chart. There's a tweezer on the bottom and then a tweezer above. You got bulls and bears slap fighting each other right now. Back to flat again. I still have those puts. Have not sold puts. Still sitting on them. You love that we don't even look at the VIX anymore. Well, like, so you guys know, like, you can't kill the VIX. You know that, right? And you guys remember Volmageddon? We can have a Volmageddon. Oh, dude, look at this. This is why. This is unusual right here. This is pretty unusual. Very unusual to see that. Fucking huge coil on a 1 minute time frame. Yeah, these fucking sellers, man. They're not having it. Fucking Carl Icahns still on vacation and he's like screaming, sell the goddamn market. I provide the liquidity. You start selling into it. Yeah, we really don't look at the VIX, do we? I stopped trading the VIX. I used to trade the VIX. I don't trade it anymore. I don't even bother trading the VIX anymore. I used to trade the VIX, and then I think like a year or two ago, we were like sitting in a I forget what the fuck it was. I don't know. We were sitting in something, and I was like, this is a sure thing. I ended up buying, like, I forget if it was calls on VIX. I think I bought some calls on the VIX or something like that. And I don't know if I was trading UVXY or something, but like it went the direction that I wanted it to go, but they still wiped out my calls. It was really fucked up. I was so pissed off that I lost thousands. And I was like, I'll never trade the goddamn VIX ever again. Never trade the VIX again. Oh, dude, come on. This is bullshit here. I'm going to sit here and watch this. Oh, look at the blood here. A little bit of a droop here. A little bit of a bull reversal here. This looks like a bull trap, doesn't it? See that? See that roll here? Might have a bull trap here. Maybe. Either a bull trap or they're trying to kill options. Could be an operation to fucking murder the chain here. Oh yeah, this looks like this looks like they're murdering the chain. This looks like a murder bot. We'll go there, but not before we murder the fuck out of you. Let me go back here and check this out. I gotta actually put a tight here. No Israel-Hamas agreements yet reached or on extending the truce. That came out 2 minutes ago. Oh, they agreed to extend 17 minutes ago. They said Israel and Hamas agreed to extend the truce. And then we have a new report saying there is no agreement yet on extending the truce. See if I can sitting on a split still. Maybe they want to come back down and retest that low again. Down here and hit that PT2. Move that over. Right there. So if you don't know, right, a failure to get up here is pretty bearish. This squeeze needed to go all the way up here and get a new high. So it's pretty bearish that it didn't. Just a heads up to you. Be careful of a downside move. Bulls, no follow through. No follow through for bulls here. Let me put him on here. Bull trap here. Bull's not able to get the high up here. Looking pretty bearish. This green bar should have went straight up and got a new high. Did not happen. Not a good look there. We'll see if the bulls get trapped here. See if you guys can see that there. That's that failure right there. I'm going to try to send this shit straight down is what they're trying. Oh, HYG, blood. HYG just got blasted. HYG just got hammered. Tesla just got hammered. Watch out here. Could have a bloodbath. HYG just got ripped to the downside. Apple not showing too much right now that I can see. Well, I guess they got a little bit of a bloodbath down, but Apple looking ugly, I should say. I said it didn't look too bad, but it's looking pretty nasty down there in Apple. Tesla coming back down to its hourly trigger. NASDAQ looking very bearish here. Big bull trap here. No, they're murdering the chain right now. Oof. Murdering the chain. I'm watching 454s are 6 cents. They haven't moved. Haven't touched the needle on 454s are still at 6-7 cents. I got a bunch of calls on 457. They're 13 cents right now. They're just murdering these calls. Spoo's getting bloody right now. Dixie trying to hold on right here. Apple getting annihilated right now. I said, what was their closing price? Not really. It's still going down. It's just going down to its closing price. 189.15 or something like that. Let me look at Apple real quick. $189.04 on Apple was the aftermarket low yesterday. Dude, that would have been a sweet fucking trade buying Apple after the bell. Tesla coming back down to check its hourly trigger right now. NASDAQ has a nasty cross on it, a 1 minute cross coming up, bear cross coming on it. Dixie looking kind of bullish here. Sitting on, added some calls. I've got 40 457s. I got a bunch of puts. They're not doing shit. They're just bleeding out both sides right now, waiting for a break up or down. Let's see what we got going on here. Fed reverse repo just happened at the 16 on the hour. Crude inventories came out at 10:30. We also have beige. I forgot we have. Then we have beige book today as well. I think we have beige book today too at 2. Yeah, 2 p.m. we got beige book. We have Messer coming out at 1:45 to speak to. It's probably the hedge that's on the market here. The beige book should matter today. Yeah, is GME still bumping right now? Let me take a look at GME. Oh, fuck yeah, 1736, baby. Fucking congrats to GME bros. You're going to park that shit and kill all these options for beige book? Fucking huge hedge on the market for beige book. Hang tight 1 second. I got some messages coming in. Dude, I don't want HelloFresh this week. When did that just happen? My password was recently changed? What the fuck? I got some weirdness going on here. It's saying that I changed my password, but I don't remember changing my password. Come on, pick a direction, dude. Pick a fucking direction. Ugh. Any fucking, I'll take any fucking direction. I'll take up or down. I don't care. Just send it like 30 fucking points. HYG recovering right now. VIX going up at the same time. VIX recovering. Apple going down to retest its post-market or after-market close yesterday. Tesla going back down to test its hourly trigger. NASDAQ holding itself up, but it has a cross on the 1-minute trigger. Not much to do. You know what? I'm gonna go potty while we wait for while we wait for a move to happen. And I'll be back with you guys in 5 minutes. Let me see if you guys have any questions. I'm getting like, I don't want to sit here till 2 p.m. I don't want to sit here till 2 p.m. till they do this dick butt shit, and then they pick a direction for Beige Book. And they're gonna pin this fucking shit for Beige Book, so I could just choose not to participate too. That would work. I might just not participate in this. Yeah, I know it's Beige Book. They're gonna pin it. They're gonna hedge this fucking bullshit. Then they're gonna squeeze it down, and if Beige Book is good, we're gonna squeeze up. We're gonna get both. We'll probably get two sides of the print, Chase. I just saw what you posted, man. You're probably gonna see both sides print. I know, Chase. Shit, we have to wait for two. We got 35 fucking minutes until they fucking stop. Until they take the fucking hand off the market. So you guys don't know what the heck. So that this right here is a hedge on the market for Beige Book at 2 p.m. So they got a finger on the market right now. Because they're long the market, and they're going to take it off if Beige Book is good. If Beige Book is bad, they'll leave it on. That's all this is right here. All right, I'm going to take a quick break. I'm not going to sit here and fuck around with this. So next 15 minutes or so, I'll come back. Give me 15 minutes. I'm going to go potty, warm up my coffee and stuff. And if we make a move up or down, you're probably going to see both sides print here. So I'll be back with you in just a few minutes. I'm going to put I'll put CNBC on for you. Hold on.
But it's interesting that consumers writ large seem to almost share Jamie Dimon's view of things, where you look at the consumer sentiment data, the expectations numbers have been very bad. There's still the majority of people expect that we're going into recession. So he's picking up on something out there that maybe the data can't tell us, but people's instincts can somehow tell us of, chickens haven't yet come home to roost.
I think there's some truth to that, and I think it's fair that there's a difference between somebody like me who looks at the aggregate statistics and then looking at the position of an individual household, where inflation matters a lot, where the cost of home ownership and higher mortgage rates matter a lot. So food and energy prices tend to reflect more strongly on sentiment. But in the aggregate sense, last year we added millions to the workforce. And that means greater growth in overall income so the economy consumption as a whole can keep growing. So I do think that there's a gap between what the individual household feels and what the aggregate household feels. And I think what the narrative could be is, well, what if the labor market slows down? What if labor demand slows down? Then that negative sentiment could take hold and you could see a sharper pullback in consumption. Not our baseline view, but certainly a risk we're watching.
Right. It's sort of, we all know that once that, if or when that happens, game over. But in the meantime, so you think either way the Fed is done hiking and the first cut is June?
Yeah, that's right. We do. So certainly I think like you've been hearing from some Fed members this week, the data since the November meeting have gone in the direction of softer growth in economic activity, slower employment growth, and some diminishment in inflation. Is it enough to get them cutting in early 2024? Probably not. But I think the messaging will shift from hawkish holds, hey, we didn't hike today, but we could, to a world where more of it's like a dovish hold. Things are moving in our direction, but it's about enough confidence before we start cuts. And for us, that means probably you're getting cuts around the middle of the year, although if activity falls off more sharply, you'll get them sooner. But I think it's that hawkish hold to dovish hold transition that we're in right now.
I know that they know intellectually they should bring down the Fed funds rate if inflation keeps falling, but I still doubt they would do it for that reason. I think it's just really hard to explain and communicate. So what do you think is going to happen with the inflation rate? Do we stall out here? Does it move down more sharply? What do you think?
I think relative to where markets are, we think inflation comes down, but a little more slowly. And that's mainly because what's left in the disinflation process to get it all the way down to 2 is disinflation in services. And if you look back in time, services never has deflation. Services prices as a whole never really fall. They just rise more slowly. So I think we're at the harder part right now where we need to get services inflation down. And we think that's going to take longer. We think it still happens. And we think it does open the door for a gradual, cautious cutting cycle, communication issues aside. But we have it getting down to the Fed's target by the end of 2025, but still being slightly above 2% at that time. So directionally, we're the same, but we have things coming down more slowly.
No sugar high here, just a steady protein diet. Everything's going to be fine. Michael.
That's right. Mediterranean diets over here.
Fish and vegetables. Thank you so much. Appreciate it today.
Thank you.
Michael Gapin with B of A. Let's get to the housing market now, where falling bond yields mean lower mortgage rates. Let's get more on that figure, plus whether it's helping to spur more home buying. Diana Olick here with the latest. Diana?
Well, Kelly, mortgage rates fell last week for the 4th time in 5 weeks, and home buyers do appear to be responding. Demand from current homeowners to refinance, however, fell sharply. So last week, the average rate on the 30-year fix fell to 7.37% from 7.41. That's the weekly average from the Mortgage Bankers Association, and rates have come down about 50 basis points in just the last 6 weeks. Mortgage applications to buy a home rose 5% for the week, still 19% lower than the same week a year ago because there's just very little for sale, and home prices are not just rising, but the gains are actually getting bigger. Applications to refinance a home loan plunged 9% for the week and were just 1% higher than the same week 1 year ago. Now, mortgage rates now are still 88 basis points higher than they were a year ago, but most current homeowners refied when rates were at record lows 2 years ago, and as a result, there are just very few who can now benefit from a refinance. Rates have not moved all that much this week, but the trajectory for now at least does appear to be lower. Kelly?
All right. And if 10-year keeps dropping, I don't know, we could go towards 7% or even below soon. But traders aren't there yet. Diana, thank you. We appreciate it, Diana Olick. Coming up, NVIDIA CEO Jensen Huang has one of the best views into the AI space. Later on, we'll tell you what trends he's seeing and what it means for the whole generative AI race and a lot of the stocks involved. The exchange is back after this. Dow's up 130. Welcome back. Stocks are near session highs, and we have some major news in the health insurance space. On the deal front, Cigna is sliding nearly 7% on a report from the Wall Street Journal that it's in talks to merge with Humana in a stock and cash deal. Humana initially popped on the news, but has also since turned lower. This also comes a couple weeks after reports that Cigna is looking to shed its Medicare Advantage business, which hasn't hit profit margin targets. Still, the combined market caps of these two companies would be in the range of $140 billion. Could raise some eyebrows at the FTC if Cigna does pursue the deal. Coming up, Salesforce having its best year in over a decade as they benefit from the AI boom. But Kroger and Cracker Barrel are down since Jan 1 as deflationary concerns stalk the food and restaurant space. We'll get the numbers and narratives on all three names in Earnings Exchange. And before we go to break, let's do some show and tell where we show you a chart and tell the story. And shares of GM are surging after the automaker announced a $10 billion stock buyback, boosted its dividend, and reinstated full-year guidance after the conclusion of the UAW strike. The shares are up 10%. CEO Mary Barra telling Squawk on the Street she's now squarely focused on the road ahead.
There was a lot of challenges this year with labor negotiations, et cetera. Those are behind us now. And that's what gives us confidence in the business, confidence to do the ASR at a $10 billion level.
At 1:45 p.m. Eastern Time, we expect comments from Fed's Mester, who speaks on financial stability at the George Kaufman Center for Financial Policy Studies Policy Conference 2023 at Loyola University. Text is expected, as well as a Q&A with the audience. German finance minister says Germany faces a 17 billion euro gap in the 2024 budget.
Cyber Monday.
Welcome back. Earnings season rolls on, and we're looking ahead to results from Salesforce, Kroger, and Cracker Barrel in today's earnings exchange. Our trader today is Quint Tatro, Jewel Financial's founder and president. Great to have you along, Quint. Can't wait to hear your thoughts on Cracker Barrel. But let's start with Salesforce, whose shares are up more than 70% this year and on pace for a fifth straight week of gains. Oppenheimer writing enterprise demand is slow but stable. Analysts want AI monetization strategies and sales growth following various price hikes. It's expensive, you say, but you're still a buyer?
Yeah, Kelly, first of all, thanks for having me. It's great to be back. Analysts want that. And I think investors want that. And what that is that top line growth. So, it's not a cheap stock. It's trading 24 times forward. EPS projections are for a growth rate of about 16%. The whisper number today is $2.12 on about $8.7 billion in revenue. But make no mistake, what we want to do is we want to see a blowout of that revenue number. And we want to hear that it's coming from basically their AI suite of products, their cloud-based, their AI chat, those sort of, tactics. We want to see that pay off, maybe their acquisitions, et cetera. If we get that, I think the investors will certainly take the shares higher. But Benioff's already done a great job of cutting costs. And so I anticipate we're going to see a strong bottom in the EPS number. But if we get that strong top line, I think this has an opportunity to head back to all-time highs here.
Wow. I mean, the EPS, the forward multiple is only around 26. So it's, I've seen worse. I feel the ghost of Munger stalking me as I say that. But still, it's not, incredibly overvalued here. Salesforce CEO Mark Benioff will join Kramer tonight on Mad Money to talk about those results around 6 p.m. Eastern. We look forward to that. Let's move along to Kroger because the shares hit a 2-year low just a couple weeks ago. And they're only 3% above that level right now. Evercore is talking about consumer strength, food prices, maybe some progress in Albertsons could eventually result in 25 to 35% earnings accretion. But Quint, why has this been such a tough stock? What would you do with it?
Yeah, it's been a tough stock because this is traditionally a very low margin business. And when you see input prices increase like we have over the last several years, those profits are squeezed and it's hard to pay a high multiple for something like this. This is not normally a stock that we would be attracted to, but I am attracted to this stock. And make no mistake, it's also because I have 3 growing teenage boys in the house and we're at Kroger almost every day. So it's nice to own, what you pay for or what you spend money on. But nonetheless, whisper number here, 94 cents. It's still not cheap. It's 10 multiple, trading and low single digit growth. But our view here is as we see inflationary pressures and input prices come down, I do not think that's going to translate to lower, grocery prices, which means we should see margin expansion and we could ultimately see profits increase. And that would be a new cycle for a company like this. Also, make no mistake, I think we're going to hear good things about the generic brands, specifically Simple Truth. As consumers change their buying habits, I think that we're going to see a lot of movement there, which also has higher margins. And Kroger's also a data company. I mean, they have 8451 in Cincinnati. They're doing a lot of incredible things on data analytics, which also I think is going to boost profits in the future. So I'm a buyer of Kroger down here.
They need to get you an investor day. I haven't heard this much enthusiasm. How many gallons of milk are you guys going through a week now? We're on like 4.
A lot. A lot. A couple of gallons of milk, lots of meat, lots of eggs. Right. It's across the street from us, so we're there regularly.
There you go. All right, let's move on to Cracker Barrel, which is up 12% in November, but still down about 20% this year. UBS is watching customer traffic amid some macro weakness concerns on sales and margins. They're saying the chain's loyalty program and promotions might be necessary to keep tables full during a downturn. You a buyer of this one?
I'm not, but I'm going to tell you, I don't think anybody from Wall Street is going to a Cracker Barrel, because if they were, they would see that they are packed.
Yeah.
I'm in Central Kentucky. They're always packed, but it doesn't matter. This is a company that fundamentally is in some trouble here. I mean, their debt to equity ratio is quite high, very heavy debt load, and only $25 million in cash. But Kelly, even if they turn these things around, they're paying out 95% of their earnings in their dividend, which, on the surface looks great. Oh, look at that dividend. But this is a dividend trap. This is a value trap, in our opinion. And any strength here, especially the last little movement we've seen, I would use as an opportunity to sell this name. I would not be in Cracker Barrel here.
I didn't know it was almost a 7% on that dividend yield. So a note of caution for others who might be enticed. Quinn, we'll leave it there. Thanks so much.
Biscuits. Yeah. Great biscuits they have, for
and
sure.
And fun toy. My parents just brought back some toys for the kids from there.
Yes.
Right. Always busy.
Can't beat the checkers. That's right.
Quinn Tatro of Jewel Financial, we appreciate it. Still ahead, NVIDIA is by far the outperformer in the SMH ETF this year. It's more than tripled amid all the AI hype. Can the fundamentals possibly justify the share move? According to CEO Jensen Huang, they absolutely can. We'll tell you what he said about the future of computing at DealBook this morning next.
1 minute remaining. Fed's Mester says monetary policy has tightened financial conditions and it will take time to get inflation to 2%, but the central bank will do it. Monetary policy is in a good place. The US central bank has time to vet incoming data. Fed's Mester supports raising capital and liquidity requirements for banks. More regulation should focus on market value of bank balance sheets. There's more work needed on credible bank resolution mechanism. Steps should be taken to increase the resilience of non-bank financial firms. Fed's Mester sees clear progress in lowering still high inflation. The economy is resilient in the face of restrictive monetary policy. Fed's Mester says that monetary policy is well positioned to be flexible, and monetary policy must be nimble in the current circumstances. And bank stress reduced, but underlying issues are still there. Stress tests should be redesigned to help banks build up capital buffers.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
All right. So I'm back. I'll tell you what. I know I'm looking at this right here, right? And I swear to fucking God, I'm like, I'll be honest. I'm like, I want to close both sides and just fucking, I'll be honest. I just want to close both sides and fucking call it a day. Yeah, I don't care if we go up 100 fucking points here. Like this is just eye bleeding right now. Here. Oh, no. Hold on. My eyes are bleeding. Like, I feel like I've done so well today that I'm like, I'll just close it up and come back tomorrow. This is like, it's not quite nightmare fuel, but it's like, like I was just on Twitter and I was like,
2 p.m. Eastern
I could have fucking like taken my money this morning, skied a half a day, like get to the mountain at like fucking noon or something like that, put in 4 hours and be done. And I'm like, what a fucking eye bleeder this is becoming. This is all like clean up after, like after the squeeze and then the blowout. Like, so we squeezed up, right? Dealer's got to cover all that shit. Then we blast down. Dealer's paying all that shit. Now they've got the brooms out and they got and you got people that are hedging for this beige book. So it's like, I'm like, this isn't it's not like we're sitting here waiting for a goddamn rate decision. I mean, they're fucking treating this like it's a goddamn rate decision. I'm like, fucking, what are you doing? Just fucking, like, I bet you there's a dealer at a desk right now going, can we just close the market for the day? If not, or can I just instead of a vertical bar, can I just put a sideways bar until fucking 4 p.m.? Fucking nightmare. Now I got 100 fucking calls out right now on, I've been adding and adding. I got like 100 goddamn calls out there. I got 100 fucking puts out there. And I'm watching them just burn it all down, waiting for the fucking, I keep adding on both sides to DCA because I don't want to lose any money. So I'm just like, fucking, what am I doing here? Like, this is a fucking waste. Yeah, I'm about to pull the plug here and wrap it up for the day. I'll leave the stream up, but I think what I'm going to do, this isn't worth the money and the time, I'll be honest with you. So I'll leave the stream up, but I'm kind of fucking bored. Aren't you guys bored? If I was you watching me, I'd fucking turn my show off and be like, I'm fucking out of here until tomorrow or until a move gets made. If you make a move up, you can short it. If you make a move down, you can buy it. So this shit right here is outside of like, I don't fucking know, fucking Jerome speaking or something. It's kind of a bore. So I'm close. I like next 5-10 minutes, something like that. It's 1:52. We got 8 more minutes till we get a decision. And my eyes are bleeding here. What are they gonna do? Like, what are they gonna do? Sell the fucking market down to fucking $2 over the goddamn beige book? And you're probably gonna see weakness here in the next 5 or 10 minutes, and then you get the beige book come out. And I'll tell you what, if this fucker doesn't move for the beige book, I'm out of here. I'll see you guys tomorrow. How about this? I'll give you a market update for what to expect tomorrow, or something like that. This is boring. This is completely fucking boring. And you know how this is gonna go. It's either gonna be it's likely gonna go red bar down, then green bar up, and they'll clean out both sides, and then. But I mean, even if it is bearish, it's just a fucking yawn fest. So I don't know. Let me know what you think. We've been sitting here now since basically the move was done here. So only an hour I've been sitting here. I guess I've been sitting here for an hour. It's not too bad. You got a little bit of a fucking over the shoulder boulder holder, but outside of the news, this doesn't mean shit if the news is bad. They could just as well fucking bloodbath it down. But I'm getting a little bored here. I know I should have spent some time I should have spent some time doing something else, but when I'm watching like VIX is just parked, Apple's parked, Tesla, you got like billions of dollars up or down just sitting here for some bullshit. And Dixie's getting fucking blooded right now. Matter of fact, is it coming into some sport now? They're like all fucking scam right now. We got it's 1:54. We got 6 minutes. Yeah, you doing the same thing? You're DCing both sides too? Yeah, that's what I'm doing. And it's like making my fucking eyes bleed. And it's all a matter of like that not enough. Like I got to keep the fucking $1,000 for you, for people like me to play, right? All right, that's it. I'm out of here. I'm gonna fucking put some cells
at 2 p.m. Eastern time. We get the Fed's beige book.
I don't give a fuck. I'm fucking bored, man. Watch this weakness come in here in the next 5 minutes, and then you'll see it. You'll get an answer. And I'm kind of disappointed that this is even a thing. The beige book's normally not a thing. So, but they're making it something fucking important today, which means it doesn't mean shit. It's a matter of price, not in my view. It's a matter of price. They're gonna turn it into meaning something. I'll tell you what, if this shit doesn't move up or down, I'm fucking out, dude. Like, I don't need to be here. I need a fucking move. Yeah, exactly. Barcode till tomorrow. That's a good way to describe it. I like that, VWASP. Yawning my ass off. Hey, what's up, Willem? Yeah, you see the same thing, right? You heard I was a Tesla bear? I know. I'm a Tesla bear. I love it too. I love when you show like the history of Tesla for like, I could go back and show the history of Tesla for like 10 fucking years. Well, that's just previous history. Yeah, well, if it's every fucking time for 10 goddamn years. 4 fucking minutes. Sorry for swearing on stream. Oh, hey, Jimmy, what's up, man? I was looking for you yesterday. See that hedge? You can see the hedge on. You can see the hedge right above us on Bookmap right here. They got to figure on the trigger to sell in case of anything bad. I don't know why. I don't know what they're expecting. My assumption here is if anything is even slightly wrong, it's just an excuse to sell. But I got some sells in, so if I can catch some sells here, up or down, I'm start closing out. Either way, if either side fills, I'm out of here. I don't care. Calls, puts, I don't give a fuck. Three minutes left. Come on, make a fucking move. No, we're not even at, dude, that's the crazy thing. We're not even in the 4,500. I don't even think we're on the gamma. We're not even on a gamma bar right now. We're just floating around out in the middle of fucking gamma right now. We're not doing shit. We're like a few dollars away. I went through a bunch of shit on the beige book this morning. The beige book's gonna give us some insight if they're going to continue to raise rates or not. That's what they're using the beige book for today. It's like one more reason that the Fed's not gonna raise rates. So that's what we're looking for in beige book today. Gives insight down the road. Looks like some of that hedge is coming off briefly. I just want fucking out, dude. The khaki book. The khaki book. Oh, dude, this is killing me. Beige book should lend some insight if they're going to raise rates, continue to raise rates or not. One minute left.
1 minute remaining.
God, fuck. Anything. Give me fucking anything. 30 seconds left. Yeah, was Diamond on was Jaime on CNBC saying stuff earlier today, Chase? I didn't catch it, but I saw some commentary on it this morning on CNBC, but I didn't actually hear what he had to say. What did he say exactly, Chase? What did Jaime have to say? Please. Anybody have any data on that? Anybody have any data on that? I'm gonna read. I'm gonna find out if anybody's posted anything on the beige book here. See if we can see anything. Yeah, John Kicklighter just mentioned something about it, saying 2 weeks until the rate decision. So yeah, he's making some points on it. It'll
price remained elevated.
Well, let's see.
This report says the economic outlook for the next 6 to 12 months diminished over the reporting period, and on balance, economic activity slowed since the previous report, with 4 districts reporting modest growth.
That's bullish, believe it or not.
Conditions were flat to slightly down, and 6
or
noting
dovish.
slight declines in activity.
That's dovish. That it's not necessarily hugely dovish. It's more neutral. It's like it's more in the favor of pausing rates. So we have some economic decline. That means what the Fed is doing is working. So I'd call it neutral. Not necessarily bullish, not necessarily bearish. It doesn't really lend any credence to from what I'm hearing right now. Price increases largely moderate across districts, though prices remain elevated. Also, I don't see any red. I don't see any red bars on Financial Juice. Normally, if it's something negative, you'd see a red bar. So there's no real negativity here. No hawkishness. None of that stuff. It's more. I'd call it more neutral.
Book, demand for labor continues to ease.
Yeah, that's all good. That's all dovish, not hawkish. That's all dovish shit. It's not dovish. It's I call it neutral. Neutral to dovish. Doesn't really lend any insight. We'll see if we can catch some of the.
Expect moderate price increases to continue into next year.
Oh, that's hawkish. Nothing earth-shattering that I can see or see right now. I've got the beige book open here. Oh, let me scroll through this fucking thing. It's available right now for publication. Here, I'll post it on FinTwit for you. Nice. Some blood here and spoos.
And more from the Fed's beige book. Some wage pressures did persist. Some reports of continued difficulty attracting and retaining high performers and workers with specialized skills.
All right, I'm going to close some puts out here in just a second. Hold on. I still have calls on here. Let's see if I can catch a down move and up move, and I'm going to be done. Let me see if I can see anything else. consumers showed more price sensitivity. That means the Fed's doing their job. Nothing earth-shattering that I can see here. I just posted it on. I just posted the book on Twitter if you want to look through it. I'll have to read this fucking thing tonight. Labor market conditions cooled, but generally remain solid. That's good for the Fed. They're doing their job, right? They got not maximum, but they got good employment on net. Employment continued to increase in the latest reporting period, edging up slightly. However, contracts reported some softening in labor demand and improvements in worker availability across district. After nearly 4 months, the recent settling of the Screen Actors Guild strike is expected to restore jobs for many New York area workers who were affected. So I'm going to go with neutral on this. Prices, inflationary pressures were little changed in most recent reporting period. The pace of input price increases generally held steady, while prices of some inputs, such as freight and logistics, have come down. Contacts reported rapidly growing costs for other inputs, particularly utilities and insurance. Keep an eye on that. Utilities and insurance might be a good thing to look at.
TikTok and Snap CEOs are to testify at the January 31st Senate hearing.
What else we got? The pace of selling price increases also held steady this reporting period. Over. Looking ahead, more contacts expect the pace of price increase to pick up in the coming months. We all know that. We all know inflation's not going away. Who the fuck are we kidding about inflation going away? Let me ask you guys this here. You fucking really think that they're going to reduce the price of goddamn eggs? No. So they only get every 2 decades to raise the prices. Did you guys see the egg shit? Did you guys actually see the egg shit out there by any chance? Like they were fucking artificial. Oh yeah, I got a nice little squeeze coming up right here. So the event volatility is off the market right now. We'll see if they're going to go back up here and see if they fail this. I couldn't see anything, or what I'm reading right now, I can't see anything that's like negative, or like that's like guaranteed that we get a rate increase. Anything that answers the question, or like answers the question of a guaranteed rate increase. I'm gonna go with non-news event. So what do we do? What are they gonna do here then? Yeah, I already gave the update for the weekly expectations, and we're doing it right now. So 4,600 by 4 p.m. on Friday would be the expectation. Like sideways and up into Friday. Holy shit, dude. What a fucking eye bleeder. So J-Pow mission accomplished exactly. Yeah, I don't think that they send it to 4,600 though until they goes like I think 4,600 calls and 460 calls are worth like 12 cents when you get there on Friday. I think they just burn them out and they tag it and then we leave. I wouldn't be like, yeah, I got 460 Cs for Friday. They'll be fucking worth 12 cents when you get there, I think. Yeah, look at them. They're just grinding this out right now, just ping-ponging it. Just ping-pong, 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 ping-pong. Cleaning it all up. Dealers coming in, vacuuming it all up. Sure, someone's going to argue with me on Twitter and be like, that was super hawkish or that was super fucking bullish or something. It's nothing. It's a nothing burger. I didn't read through some of this stuff here, but I got to read through it tonight. The rest of it tonight. Okay, so what else do we have today? We've got Beige Book is it. We got no news. Tomorrow, the only news that's available is, we got big news tomorrow. Claims, PCI, PCE. What else we got? PMI, our Chicago Business Barometer, PMI. We've got New York Fed President Williams speaking, pending home sales, stuff like that. Friday, we've got that's big news, I guess. Then tomorrow, on Friday, we've got manufacturing PMI, ISM for manufacturing. And then we got, of course, Jerome speaking on Friday twice. I wouldn't expect anything out of Jerome Powell on Friday except for prepared remarks and possibly some shots across the bow to try to spook the market down or something like that. But outside of that, I'm not reading too much from Beige Book. I'm not catching any Beige Book doom and gloom or anything like that out there. If you do and you think that there is some of that in the Beige Book, let me know in the chat. But I couldn't see anything that mattered. Nothing that mattered on my end. Yeah, Binky's saying Theta Gang at a month window dressing. I agree, Binky. It's like I'm shocked they pinned it here for the Beige Book. Like, I don't know what the fuck they were expecting. All that Beige Book comes from data we already have. So I don't see any insight there. Oh, I don't see any insight saying, if anything, it lends itself more to or no rate increase. It definitely does. No rate increase from that Beige Book. They're doing their job. Things are going. It lends itself to not another rate increase. That's it. It doesn't give any insight that they're going to raise rates. That doesn't answer the question if they're going to raise rates. I think they should. I think that he should come out and fucking slam us with 50 BPS, but I don't think he's gonna. I think they're done, dude. They might be done here. I think the Fed is probably done raising rates, and with threats of waiting and seeing, but you'll never see it again. You'll never see it. I think they're just gonna. That's the soft landing, right? In my view, we're done raising rates, probably. Probably done raising rates. At least done to wait and see. Still haven't sold the call side, sold the put side, and just waiting to see what happens here. Maybe they leave the hedge on until they claim to leave the hedge on for that stuff tomorrow. I don't know. What time is it right now? It's 2 in the afternoon. Yes, I am covering Cybertruck tomorrow, and I will stay with you guys tomorrow through the entire event, or the majority of the event tomorrow, and we'll trade it together tomorrow. Look at this action, dude. This is fucking terrible. This action is horrible. And matter of fact, Bonds right now is calling out this Beige Book and saying, "Fuck you, we're going up." So if you look at HYG right now, risk on bonds, they're like, "Fuck you, we're not." They're pricing in right now no rate increase for December. So at least the betting right now is positive for bulls in the short term. What else we got here? And matter of fact, on that Beige Book, Dixie kept fucking selling down to the depths of hell. NDX coming back again. Double bottom, triple bottom on NDX. So if you're looking for some doom today, you may not see it. You may not get that doom that you're looking for. Now you might get a pin for tomorrow at some point into the close today. You might get a pin. We trade this sideways or something like that. We got to go up here and tag this right here. But I don't see any other doom or anything to worry about until tomorrow with that other data coming out. And that data is likely going to, I mean, look at these guys here. Look at this price action right here. This is all scams right here. This is all a fucking scam. So I would expect let's go over and look at the close here. We're above the hourly trigger. That's bullish. You can see the hourly trigger coming up right now. I want to show you this. See, this hourly trigger just keeps coming up and up and up and up, and it's going to keep coming up and up and up until we get to 4 p.m. So slow grind up into the close likely, unless they can get underneath the 455.76. Slow grind and pin into the close. I'm not going to expect too much doom. I would be very careful. The only thing that I'd be careful here would be the burn into the close. My assumption here is going to be they're going to burn you right into 4 p.m. Puts and calls. It ain't going to matter. So that would be my expectation of the close today. I would not trade this ever today. Maybe if you want to take out a flyer, something that expires at the close, if you want to do something like that, but I'm not expecting anything. Matter of fact, I'm going to probably drink some beers and hang out for the rest of the day because we got a long day tomorrow with this. We have no rejections here. We're sitting on positive. This is bullish right here. So we're above the hourly trigger. If we are above the hourly trigger, we are bullish. We have to be underneath this fucking thing to start to get bearish. So until they put us underneath it, we're bullish. This is support, this is not resistance. This is support. I don't give a fuck what Bookmap is telling us. This is support until we get underneath it. You got to get underneath this hourly trigger to start getting your bear town on. So my expectation here is that you're going to slow grind up. until you get underneath the hourly trigger. Kind of sucks, man. Not much going on here. And this looks pretty bullish here, right? All this like looks bullish to head up. So unless we get underneath that hourly trigger, I'd expect like up and sideways into the close. Yeah, did you see the artificially inflated eggs? That proved my point on eggs, didn't it? We were talking about eggs past few months, right? And they got busted inflating the prices of eggs. And then I saw someone claim that, well, they had sick hens, and I was like, that was like 1% of the flock. So they were trying to like push that narrative that the price of eggs were high for sick chickens. It was literally like 1% of the flock. So. All right, that's it. I'm going to post something. Hold on a second here. All right, I'm gonna wrap the stream up here. And do you have any questions for me before I go? Oh, what a fucking eye bleed. Look at that shit. Nothing. Look at this. Ping pong. Ping pong. Ping pong. Ping pong. Ping pong. Ping pong. All right. I'll see. I'm gonna leave the stream up for you. How about that? And I'll put CNBC on. I'll be back at 4 p.m. to turn the stream off. I'm going to expect sideways action and slightly up into the close. I don't see anything bearish here. If you see us break below at any point the hourly trigger, I guess you can get your bear on, but dude, I'm telling you what, I'm not going to expect shit the rest of today. We got no news till morning. All right, I'll see you guys. I got calls. I'm going to close them out. I'm going to put a sell order in for like 15 cents and get out of here. All right, I'll talk to you guys soon. Later. I still have the calls. I only cut the puts loose. I still have I got calls that are sitting at 12, 13 cents. I'm going to put a sell order in at 15 cents. That'll get me out at even, and so I'm good to go. All right, I'll talk to you guys soon. Later. I'm going to leave this up. I'm not going to turn it off. Matter of fact, how about this? I'm going to go get a drink. If I start getting my buzz on, I'll come down and talk to you guys. All right, later. I'll come down. We'll start drinking and partying. Later. I think that stuff all looks pretty decent for you guys. I think this is showing. There's pivot down there. There's R2, R1. You watch this, dude. They're going to grind this shit. They're going to grind this shit right into that bell there and not do shit. Leave that. I'm going to leave that here so that you can see the 4 p.m. over here.
Well, I think that right now credit quality is pretty stable in the sector as a whole, or the asset class as a whole. We have been watching healthcare in particular. There have been some challenges on the fundamental side because of the cost of employing contract nurses to keep up with demands. We've seen some of that come back a little bit, and operating margins are starting to stabilize, to improve. There's still a ways to go, but we're starting to see some stabilization in that sector. And then on the mass transit side, everybody's heard the issues with return to office and the fact that this is hammered
diesel
on
futures
transit.
settle at $2.88
We've always felt
a gallon.
that what was going to get transit back on track was a combination
NYMEX gasoline
of
December futures
differences
settle at
in
$2.28
scheduling
a gallon.
Probably fare box increases or increases in your ticket, and then support from state and local governments. And this past budget cycle,
NYMEX
we've seen some of the largest
January
states
futures settle
provide
at $2.80.
to some of these mass transit
NYMEX
systems. So
WTI
it's not
crude
over. They've
January
still got some
futures
other
settle
work
at
to do, but we're starting to see that support
$77.86 a
we've been
barrel.
looking for.
That's
All
up
right. People are sniffing around,
$1.45
looking
or
for opportunity.
1.9%.
Jennifer, thanks so much. We appreciate it today.
Thank you, Kelly.
Jennifer Johnson with Franklin Templeton. And that does it for us here on The Exchange. Looks like stocks are right around session highs. But we're coming right into the beige book next on Power Lunch with 2 weeks until the last rate decision of the year. We will get the Fed's latest report on the economy with that beige book in just a couple moments. Dom Chu is in for Tyler. He's getting ready. I'll join you on the other side of this break.
Welcome to Power Lunch alongside Kelly Evans. I'm Dominic Chu. Today we are remembering Charlie Munger, the legendary investor best known as Warren Buffett's partner. We'll look at some of his best wisdom for investing, for life in general, and just everything he meant to Wall Street. Also, Mark Cuban making some major moves, quitting his job, so to speak, selling his team. He's going to spend more time with his family, but he may also have bigger plans as well. Kelly.
Interesting. Looking forward to that. Let's check the markets, which are near session highs at the moment. Dow's up 134, and it's leading the way today. The S&P is up 10 points for a 0.25% gain, and the Nasdaq trailing, but still up 19. Shares of General Motors are also popping today by about 10%. This after the company detailed the impact of those labor deals, saying they'll have enough cash, and as if to prove it, they're raising their dividend and buying back $10 billion worth of shares. And a huge deal brewing in the health insurance space. The Wall Street Journal reporting Cigna and Humana are in talks to combine. You can see big intraday moves in those stocks, which are both negative. Cigna by almost 8% now. Humana by 3.5%. More on that later on. But we have to start by reflecting on the life and impact of investing legend Charlie Munger, Warren Buffett's longtime business partner and the vice chair of Berkshire Hathaway. Indeed, here on set is someone who has observed Munger at many meetings and is a legendary investor himself, Mario Gabelli, the chair and CEO of GAMCO Investors. We got the almanac here.
I got a copy of it.
Yeah.
Glad to be here, Kelly. Dom, to see you in person. I feel like that guy Tom Hanks in Castro. I'm back on set here.
I love it. I love the fact that you have the original almanac right there.
Well, we have it, but it was a gift in 2009 from someone.
Yeah, it's going for it. So I brought in, I do have a copy, but my cat attacked it a couple years ago, so I don't think I could sell it for the $75 it's going for.
That's not the same as my
days.
Dog ate my homework.
Right?
Yeah, I know. It's similar.
It's just one of those small things in life.
What happened is that I met Warren because I knew of Warren, because when I went to study under Graham and Dodd, Roger Murray succeeded him at Columbia. Warren had studied under Ben Graham. Then he covered and owned a piece of a company in New York City called Pinkerton's. And I followed the detective agency companies, Wackenhut, Pinkerton's, and Burns. And so you learned about what he did about taxes. You learned about what he did about cash flow. And then fast forward somewhere around a quarter of a century ago, not that long ago, 25 years ago, I would be invited to the annual meetings by Alice Schroeder. And then when she was no longer doing it, we've been doing that for 15 years. So I actually found one of the cards as a shareholder.
You can hold it up again.
I did not buy the shares of Berkshire Hathaway for clients until we had our open-end fund, which was started somewhere in the mid-'80s.
Wow.
So we bought it at $3,000, and we have done significantly well. But what the lessons from Charlie was that when you go to the meetings, what happens is that they have a little cartoon video, but Charlie's always in one of those. So it's always an interesting scene that he sets. And then the second part is obviously when Warren goes around after the business part, they ask questions. And the audience asks questions, and occasionally Warren would turn around, Charlie, do you have anything to add? And then he would say something very cryptic and interesting.
Yeah.
So sometimes he'd also say, I have nothing to add.
So what you mentioned, obviously, you've been shareholders or on behalf of clients since the 80s. Any moves you'd make with Berkshire? I mean, they haven't obviously been as active in recent years. They've been doing a lot more with their investment managers and the deputies now and things like that.
Well, they bought a company that we owned that was quite important in the insurance business, and that was about $8 or $9 or $10 billion. I kind of forget. But when you look at the portfolio, and you say, okay, there's 1.4 million shares of Berkshire that sells for $550,000, and what is it going to have as book value next year? We think it's going to be higher than that, higher than the $550,000. But Apple is extraordinary interest. Here's a guy that maybe would have, before Charlie, he would say, you know, tech, See's Candy was high tech to Warren, or the blue chip stamps, or the stamp book that they had. But independent of that, that is a significant amount of value in the company. So now you're Warren, and you know that the way to make money is they've adopted is a good business, good management, and a reasonable price. And so instead of buying something that you can liquidate and make money, like the old story of a cigar butt, that is, buy it and then liquidate it to get the cash back, among other things. That's what he did. Charlie had a great sense of humor.
Has it informed your investment? We talked about how what you did way back when, but as Berkshire has evolved, do you think a lot of the people who followed the Ben Graham and the value investing, do you think they've evolved as well? Well,
there's no question that basically when when Warren started, he'd have to go to Washington, D.C. to go to the SEC files to get data. When I started, you'd go to the New York Stock Exchange, you get microfiche. Today, in the future, you're going to gather data with AI. So gathering the data is going to become different. The second part is that if I went on and looked about what Kelly Evans has done, what's a history and so on, or Dom, I would have to double check it. We've done that before. I've asked for speeches to be prepared. For example, the governor of Nevada, he's now the president of UNR. And so there's a lot of facts that need to be checked. But over time, that's going to evolve. Yeah. The second part is, how do you handle the value of a franchise, which is the goodwill or the value of a business on the books. That has historically now was part of Ben Graham. And so you evolve certain type of dynamics.
Yeah. So we've got some headlines coming out. We're going to go from the microeconomic company-specific stuff to Steve Leisman right now, who's got details from the Fed's Beige Book results. Steve, this is the look anecdotally at the U.S. economy. So what is the Fed and its member banks, what are they saying about the U.S. economy?
Yeah, something that really animates the Fed these days. I'll talk about that in a second. They said economic activity slowed, with 4 districts reporting modest growth, 2 districts saying growth was flat to slightly down, but 6 districts said there were slight declines in economic activity. Just so everybody knows, this is the 6 weeks ending about mid-November here. So this is a report from the fourth quarter, not the third quarter, where we got that strong growth. Retail sales were mixed, with declines in durables like furniture and appliances. Sounds like that was very housing related. Consumers showing more price sensitivity. That's important for the inflation outlook as to whether consumers are pushing back on price increases. Travel and tourism was generally healthy. Manufacturers' outlook, though, it did weaken. Currently, it's mixed, but the outlook weakened. And demand for business loans declined, particularly for real estate. Consumer credit, though, remained healthy. A lot of talk about that, though some banks noted a, quote, slight uptick in consumer delinquencies. Not a big uptick, a slight one. Overall, the economic outlook for the next 6 to 12 months diminished compared to the prior report. On to the important aspect of the labor outlook. Demand for labor continued to ease. According to the reports from the districts, more applicants were available, retention improved, and there were reductions in headcounts, both through layoffs and attrition. It was a very different report that we had, say, during the very, very strong labor markets we have. Labor market, however, is still set to be tight for skilled workers. We do hear that from small businesses. On the important aspect of wage growth, it was said to be modest to moderate. Many districts reporting an easing in wage pressure. Another good sign for the Fed in its fight against inflation. Overall, on inflation, price increases largely moderated, though obviously prices remain elevated. Most districts expect price increases to moderate into next year. Dom, the way the Fed is running the show right now, they're kind of in a holding pattern, looking for a reason to go either way. And so, as you heard from my interview this morning with Richmond Fed President Tom Barkin, they're relying more and more on anecdotes like this. This suggests that the economy is moving in the way that they want, which is a slowing economy after that breakneck number we got this morning of 5.2% growth in the third quarter. Most economists I see now looking at more like a 2% range for growth. Dom?
It also implies to a certain degree that the scales are balanced from a rate perspective. They're looking for something to tip it either way. So those anecdotes are important, Steve. Thank you very much. We'll talk to you later on. Let's get some more market reaction to the Beige Book and the state of the economy and markets with Mario Cabelli, who's still on set with us here. You heard the Beige Book.
Well,
it sounds like it's okay.
Come on, Steve did a good job. But when you step back and say, okay, what is the world like for investing? Forget about short-termism in the market, which is dominant because of a variety of things. Basically, the International Monetary Fund says there's $110 trillion of global GDP. The United States is 25%, China's 17%, Europe is about 17, 18, a lower number. So what's going on in China? What's the implications of that on the global marketplace? What's going on in the United States? You break the U.S. down, consumers 70% plus or minus. Then you got industrial, then you got government spending and blah, blah, blah. The consumer's net worth, when you get the numbers, given the rally in the month of November, given the elevated housing prices, that's going to be at least $150 trillion. 10 years ago, not 10 weeks ago, it was $75 trillion. The consumer debt has gone from 14 to 20. Up 6, but the net worth is up 75. You have an income disparity, and that's why what the Screen Actors Guild, what the UAW did, and what others are doing to try to raise wage parity and help pay the bills of electricity, housing, food. That has a major, in quotes, regressive impact. So from our end, this recession, we've gone through so many cycles. So the consumer's okay. Autos, UAW is on strike. That's recovering. Car sales will be out this week. SARs are going to be around 15.5 million seasonally adjusted annual rates. So blah, blah. The industrial sector has, every company you talk to in the Midwest, reshoring, whether it's put in Mexico or in the Midwest, and both are happening. You got the CHIPS Act, you got the IRA Act, you got the IIJA Act, all of which are coming together. So while you're having the Fed try to reduce aggregate demand, The amount of money that's being put into the system by the government is completely opposite. They're also reducing the amount of money that they have on their balance sheet by $95 billion a month. That's $1 trillion a year. So you're going to have some tightening, and there's a lot of trade-offs. That's the way we see it.
So trade-offs is one thing, then. If you're talking about the same kind of push into the economy, macro-wise, that you're talking about from all the stimulus that's going into the system, at the same time money is getting taken out or tightened by the central bank and its actions, right? It implies then that there's a level or an equilibrium that has been reached.
No, that it's going to be reached.
That's going to be reached.
I'm not saying it's there yet because the banks themselves have some issues going back to FASB without getting into accounting dynamics about the banks on held to maturity. The fact that the Fed, the 10 years dropped from 5 to 4.30, puts a little extra value on their balance sheet, so it reduces the amount of negative elements on the balance sheet on a mark-to-market basis. So I don't know what's going to happen. That's not the relevant point. For me, that's all short-termism. Okay, when I started in the business, the Dow was 1,000.
Wow.
10 years later, 1967, I was a sell-side analyst. 10 years later, it was 1,000. Today, it's 35,000. 40 years now, 40 years from now, when we get together, don't be short-term, it's going to be 1 million. That's an 8.2% CAGR. Right now, if you look at the numbers for the last 100 years, it was 10.2.
Do you worry about what Munger said at the meeting this year, that he thinks, maybe the next 3 to 5 years could be a little bit more challenged?
Yes, of course. That you have to think that way, and that's great. And on the other side of the coin, you've got Look, 4 years ago, if we were here, and I was, Wuhan, what's that? Russia invading? What, are you kidding? The bank's having a crisis again? The Mideast crisis, well, that you wouldn't have dismissed as much. And then you have a food crisis, an energy crisis, a water crisis, and all sorts of challenges on a global basis. So what's different?
Right.
And so within that framework, if I look at the data for the next X number of years, so it stays flat. You can make a lot of money in the markets by looking at that, by doing simple things like buying specific stocks.
So let's get right into that, because you're at your trade, you're an analyst. You pick stocks, you look at their balance sheets and income statements. What is the opportunity right now? Where is it? Are there specific areas? Is it still media? You love media in the past.
We agree. Let's start off with a simple A. You talked a little bit about Miriam Adelson selling some of the family money to, maybe because they were worried about Macau, who knows? They're buying a baseball team. Is it a basketball team? Yeah. Mark Cuban's company. So here I want to bring you the Atlanta Braves, publicly traded, $36, BATRK, 61 million shares. Multiply that as $2 billion. We think it's worth a lot more. I think you'll make, and John Malone and Greg Maffei will probably monetize it in some fashion. So batter up. Secondly, the baseball, because of the growth in the Hispanic market, the growth of Hispanic players, the fact that you have a pitch clock, much like we have here, you got to buy it. So you got to buy a baseball team called the Atlanta Braves, and then if you want to buy a basketball team, I think Jimmy Dolan, besides being beat up by politicians in New York, is doing a good job. His venture capital play of the Sphere has worked for him. Okay, how he monetizes that is work in progress, but it is really a technical delight. The stock is selling at $171 with 24 million shares. The Dolans control it.
The Sphere stock? You like?
No, this is Madison Square Garden Sports.
Yeah.
MSGS, Madison Square Garden Sports. You're getting the Rangers, you're getting the Knicks. And, the Knicks did okay last night. They got a game coming against Detroit. We'll see, but that's not relevant. So those are two things. Then agriculture. The American farmer works his fanny off 24 hours a day, plants fence to fence. There's a company that is relisting from the Milan Exchange to the New York Stock Exchange at the end of the month called Case, end of December. Case New Holland, CNHI. The guy that runs it, Scott Vine, came out of Polaris in the United States, and the stock is 10. 1.3 billion shares, 13 billion market cap. John Deere is selling at 360 with a couple 100 million shares, 300 million shares, or 288, I forget the number. Bottom line, we think you're going to double your money. Short term, however, the stock is delisting, and certain entities in Milan or the European markets can't own it.
I remember this. I mean, for those people who aren't familiar with the stock that Mario just talked about, they make heavy machinery. It's the stuff it's John Deere type stuff. It's a farm equipment, basically.
Well, it's Case New Holland. The old Ford machinery, the old Case New Holland. When I was a rookie analyst, I'd go visit them in Racine, Wisconsin. They then relocated down to what do you call that place, Houston. going back to one more dynamic, advertising, you asked me about it. You're going to have a tsunami in political advertising in 2024. I'm asking every viewer to contribute to their favorite politician because they're going to spend it on my advertising on broadcasting stations.
He's got an axe to grind, Mario
including
does.
CNBC. So, Brian, if he's listening, Comcast will do well. What TV stations will benefit? Tegna, T-E-G-N-A, has been buying stock back. They're down to under 200 million shares. That's a $3.2 billion market cap. The regulators turned down a deal to be bought at $23 for some. They did it in a very interesting way. I think that the stock's around 15. You're going to make 50% in 2 years.
Mario,
so those are the kinds of things.
Armed with a slew
of
stock picks.
I own about 300 or 400 of them. I got a lot of losers too. Which ones do you want to hear?
We got to bring you back when we have like an hour to talk about stock picks.
We'll be delighted to do it.
Overall.
Great to see you all.
Thank you so much.
Thank you very much, Mario Gabelli.
Good to be on the show, and thank you.
Thank you for sharing your reflections too about Charlie. We really appreciate it today. Mario Gabelli. Coming up, we'll talk shares of Foot Locker jumping as the company's results not quite as bad as feared. In our journey around the retail ecosystem, we'll look at some stores inside the mall. FL right now at 16%. And as we head to break, Rover's also up. The pet care company agreeing to be taken private by Blackstone for $11 a share, or $2.3 billion. And it's trading almost at that level with a 28% pop. We'll be right back.
Freelancer.
All right, welcome back to Power Lunch. As you just saw, there are stocks at session highs right now. Meanwhile, the 10-year yield falling below the 4.3% mark. You just heard Mario Gabelli referring to that for the first time, by the way, since September. So let's get out to Rick Santelli in Chicago for more on that bond trade. Rick.
You know, it's all true.
I'm going to turn the, I forgot earlier, I'm going to turn the chat on for you guys on YouTube and on Insider. I'll turn the chat on. I should remember to do that for you guys. So anyone, if you're a subscriber, which is free on YouTube, if you're watching right now,
are definitely
I'm going to turn that on.
Look at a 2 and 3 year note on one chart. They're
here, hold on a
back
second
to
here.
July.
Can you guys even hear me?
10s and 30s, as Dom pointed.
Okay, so I'm gonna turn on. You guys are free to chat all you want. Member, non-member, whatever. So here, you guys can all chat, and I'll turn all that on for you. Not much going on here, right? Just pin into the close. Pin, pin, pin. Not doing shit right now. There you go. So you guys can talk in the chat if you want on YouTube and Twitch.
Monday. Welcome back. Disney CEO Bob Iger is sitting down with Andrew Ross Sorkin at DealBook, and let's listen in.
We're about to get a phone call from Susan Arnold, who's on the board.
Chairman of the board.
Chairman of the board.
Was.
And you think that that call might be asking you back. And you say to Willow Bay, your wife, what?
Well, I was aware that Susan Arnold, the then chairman, wanted to talk to me, and I got a sense that the board was making a decision to make a change at the CEO level at Disney, and that they might ask me to step back.
And you say to her?
And I said to Willow, I'm getting this call.
it's possible that I could get asked back. She immediately said, well, maybe not. Maybe she just might, they may want your advice.
So she didn't think you were getting the call for that?
She wasn't sure. And I said, well, what if I get asked? And interesting, until maybe a day or two before, first of all, I was not seeking to return to Disney at all. And until a day or two before, I was not anticipating I ever would. And so I asked Willow, what do you think? And she said, well, they might not ask you, but if they do, she thought I had to say yes. And I asked why, and she quickly reminded me what I already knew. She said, you ran the company for over 15 years. You've been at the company, or you were at the company for almost 50 years. You kind of owe it to the company. If the board wants you back, because they obviously don't feel they have an alternative, at least not at that moment, then you owe it to them to say yes. It was very quick, and I realized as I heard her words, she was absolutely right.
Okay, what does she say now?
I haven't talked to her about it. What does she say now? Interesting, maybe surprise you. I don't bring that much work home with me. I like to leave the job at the office when I can.
But you didn't think it was going to be like this?
I'm interested in her work. No, we've had conversations about it being much more challenging than I expected. I felt that from the beginning when I came back. But I'm not daunted by it. It's just a lot more work, nor is she daunted on my behalf.
You said that you didn't want to come back, but there's been a lot of reporting that you never really wanted to leave. And even people now say, well, is he really going to leave in 2 years from now again? That you were frustrated. You were frustrated with Bob Chapek.
That reporting is completely inaccurate, completely. I had been CEO for about 15 years. I said I started the company in 1974 at ABC. It had been around a long time. There were plenty of things in the world that I was interested in, that I either wanted to do or wanted to learn more about. I had not really had a day off, and I don't even remember. And I was thoroughly enthusiastic.
But you were frustrated.
Plus, I felt that I had accomplished so much during my former tenure, including opening the Disneyland in Shanghai and going into the streaming business very successfully. And it wasn't about being bored. It wasn't about lack of challenge. It was just that the time was ready.
But fair to say you were frustrated. You were watching this company.
No, frustrated about what?
Meaning from the outside. On the outside. You're now out.
You were asking me about whether you ever wanted to leave in the beginning. The answer is I did, which is why I left.
Okay, but now you're on the outside.
Right.
And you're watching.
Busy, doing other things.
Doing other things, but Bob Chapek's in that role.
Yes.
And you were thinking what?
I was disappointed in what I was seeing, both during the transition period when I was still there and while I was out. But I really worked hard at distancing myself from it because, one, I couldn't do anything about it. In a way, it wasn't my business at all, really. It was his business to run. And again, I was not happy with what I was seeing. I worked hard to build the company into what it was over that long period of time. I was proud of those accomplishments. It hurts when something that you've put your heart and soul into and that you care about so much is going through a difficult time.
Okay, so let's then talk about succession, because there's a lot of people in this room, business leaders, who have to think about their own succession, other types of succession. What was your mistake then? To the degree you think that Bob Chapek was a mistake, and I assume you imagine it's maybe one of your biggest.
Well, first of all, I'm not the only one that may have considered it a mistake. The board obviously had its issues with Bob. But
you knew him well.
I've tried he worked for me for quite a long time. I've tried hard to conduct my own post-mortem, just so that we as a company don't do it again. What did we do wrong? And we've discovered certain things that perhaps we could have done better, but there were also a lot of unknowables, and I don't want to get into any of those.
But is there a lesson for you in terms of who you're supposed to listen to, in terms of
it was interesting, when the vice president was talking about it, there's no job that really trains you for this job. In many respects, that's true at Disney too. It's a large, very complex company that's in the public eye all the time. There's interest from just about every sector of society in Disney. And it takes a certain type to be able to not only compartmentalize when it comes to managing issues and problems, but I think it takes a certain constitution, a tremendous amount of energy, a tremendous amount of patience, the ability to communicate on multiple subjects, sometimes back to back to back to back. And I think that, you know, when we make the decision again and the succession,
what will be different this time?
The succession process at Disney, first of all, is robust right now. It didn't.
But was it not robust the first time?
It was, but I think we're approaching it differently, and I just don't want to. It's just not something I feel. Other than saying that we're aggressively pursuing succession, there's no more detail that I want to give.
Do you think in 2 years you really will step down?
Given the list of things that I have to do, yeah, I'm definitely going to step.
Well, you could say, given the list of things you have to do.
No, we're attacking each one of them. I'm confident we will do so successfully.
Let's talk about that list for a second, because one of the things you did, and I want to get your thinking and just understanding how you think about it. You went on television over the summer from Sun Valley, and you put out a lot of things on the table. You said, you know, we're thinking about selling ABC and the linear channels. We're thinking about finding a partner for ESPN. We're in the midst of trying to figure out with Hulu. You've now resolved that. You talked about some of the creative channels. You put everything out there. And by the way, the folks at ABC just up this way almost had a heart attack when they heard all of this. What was your thinking in terms of, just take us inside the thinking of saying that all aloud? A lot of CEOs try to wait until they have each deal done.
I've spent a year since I came back fixing a lot of problems that the company has had and dealing with a lot of challenges, some that were brought on by decisions that were made by my predecessor, some that are just basically the result of a tremendous amount of disruption in the world and in our business, including dealing with the business model that those linear channels have rested on and have succeeded on top of for decades. And sometimes when I'm looking for kind of a reaction to my own thought process, I like to test that process in public, particularly in ways that I might be able to actually get a reaction from in the investment community. So my thought was at the time that I would essentially be public with some of that thought process. I think what I said about the media networks at the time was that everything was on the table, and they might not be core to our company. Right. I think I went that far, and that was a means of my saying to Wall Street or the investment community that our heads were not in the sand about the challenges that those businesses were having. I did not want to get accused of being kind of an old media executive. That we're a company that had already shown an ability to basically adapt to new circumstances. So I wanted to, one, convey that, and two, see what the reaction would be. Would it be applauded? Would it not? I did not say they were for sale. The coverage of what I said they were for sale. There's a theme here, by the way, a little bit, just in terms of what is being written about us and what is accurate. No, it is not for sale. But like all of our assets, we constantly are evaluating what is their value to the company today. What could the value be tomorrow? Is it a growth business? Is it a business that?
But do you like the business still?
Contract?
I mean, there's been a big question about the linear channels and whether they're worth keeping.
What we've discovered in this process, which has been unbelievably rigorous at the company and involves a number of executives who are managing those businesses, we've determined a few things. One, that they can be run more efficiently with some difficult choices. You mentioned cutting over $7 billion in costs. We can do that. Second, they can be run in partnership with those businesses that sit atop the new business model, which is streaming. And there are means of aggregating audience, of amortizing cost, of basically aggregating audience, reaching more and different people. And so we actually, through this process of being more public about what might happen or what could happen, and really rolling up our sleeves and figuring out, is this something we should do? Should they be divested? Should they be kept? If they are kept, how should they be run? And actually, they're being run much more efficiently today than they were in July when I made those comments.
Let me ask you a different question. You ultimately bought Hulu from Comcast.
Yeah.
But you said the following. You said there are 7 or 8 platforms in the streaming business alone that are in general entertainment. That's a tough business to be in competitively, and it's not our strongest suit.
When I came back to the company, and the company had been through a difficult time, partially because of COVID, and the balance sheet wasn't as strong then. It is much stronger now than I would have liked it to have been. I asked the question, do we write Comcast a check for what could be $9 billion, or should we consider selling it to them? Is the business unique enough, valuable enough to us long-term for us to write them the check and buy the whole thing, or the opposite? And I created a rigorous process to determine what is the right answer to that question. I worried that there was, in general entertainment programming, unlike Disney and Pixar and Marvel, that it's not as differentiated, maybe not as valuable, but then through this process determined that owning the whole thing had real value, because partnering that business with the other branded streaming business, Disney Plus, could actually create a huge opportunity for us, and thus we decided to keep it rather than sell it.
Let me ask you about that IP. You just mentioned Pixar and Marvel and so many of these other things. Very recently, as you've seen, because you get the box office numbers every weekend, a number of these films have not performed. They have not performed the way they used to. People question the creative magic at Disney. You can look at the Marvels. I'm curious why you think that disappointed. You could look at Wish, Indiana Jones. What do you think? What's happened?
Well, I think you have to look at it a couple of ways. First of all, I think the movie business is changing, actually. Box office today is about 75% of what it was pre-COVID. I think we have conditioned the audience to expect that these films will be on streaming platforms relatively quickly, and that the experience of accessing them and watching them in the home is better than it ever was. One, easier to access in terms of the technology. Right. Two, just the visuals, better sets in your living room than before. And a bargain when you think about it. Streaming Disney Plus you can get for $7 a month. That's a lot cheaper than taking your whole family to a film. So I think the bar is now raised in terms of quality about what gets people out of their homes into movie theaters. Some of it is just being part of basically the social wave. Certainly Barbie and Oppenheimer did that for two other studios. And so I think that's one thing. Second, in our particular case, and specifically about those films, some of those films, they were not as good, they were not as high in quality, not every one that you mentioned, as some of their predecessors, our films, and as they should have been, particularly in this environment.
Why do you think that was?
Well, The Marvels was shot during COVID. There wasn't as much supervision on the set, so to speak, where we have executives there really looking over what's being done day after day after day. And that was a result of, mostly of COVID, but at the same time, we increased our output tremendously to feed the streaming platforms. Too much, by the way.
Mistake.
Definite mistake. Quality needs attention to deliver quality. It doesn't happen by accident. And quantity, in our case, diluted quality. And Marvel suffered greatly from that. So there are different reasons, and I'm the first, I've been very public about it, saying, I would say right now, my number one priority is to help the studio turn around creatively. Now, let's also put it in perspective. We set the bar so high. Year after year after year, we had the best performance in the business, probably for a decade. And I'm not sure another studio will ever achieve some of the numbers that we achieved with multiple. I mean, we got to the point where if a film didn't do $1 billion in global box office, we were disappointed. That's an unbelievably high standard. And I think we have to get more realistic. A couple of the films you mentioned, by the way, which is interesting about kind of the New World Order, did okay at the box office. Elemental's a good example, about $500 million at the box office. By the way, to some studios, that would be a gigantic hit. When Disney has a $500 million film, it's a failure, which is interesting. But then it went on Disney Plus and had massive consumption. Right. So that says something. Maybe people didn't perceive it was the kind of film they needed to see in the theaters, but they certainly, when they discovered it on Disney Plus, enjoyed it.
Let me ask you about this, about franchises and the value of IP. I don't think actually most people have ever read this letter, so I'm going to read it aloud if I could. This was a letter written in 1966 by Walt Disney, the man himself. It was 2 months before dying from lung cancer. He was a heavy smoker. And he wrote this to shareholders about what he said makes us tick here at the Disney organization. He said, many people have asked, why don't you make another Mary Poppins? Well, by nature, I'm a born experimenter. To this day, I don't believe in sequels. I can't follow popular cycles. I have to move on to new things. There are many new worlds to conquer. As a matter of fact, people have been asking us to make sequels ever since Mickey Mouse first became a star. We have bowed only on one occasion to the cry to repeat ourselves. Back in the 30s, the Three Little Pigs was an enormous hit, and the cry went out, "Give us more pigs." I could not see how we could possibly top Pigs with Pigs. But we tried, and I doubt whether any one of you reading this can name the other cartoons in which the pigs appeared. We didn't make the same mistake with Snow White. When it was a huge hit, the shout went up for more dwarfs. Top dwarfs, why try? Right now, we're not thinking about making another Mary Poppins. We never will. Perhaps there'll be other ventures with equal critical and financial success, but we know we cannot hit a home run with the bases loaded every time we go to the plate. We also know the only way we can even get to first base is by constantly going to bat and continuing to swing. What would Walt think now?
I'm going to talk to him later. Maybe I'll let you know. I actually think about that a lot. We about 5 years ago, we put Walt's office back together again, taken of everything, including the order of the books on the shelves, and we decided, kind of out of respect for him, we would just return it to what it looked like then. Interesting, you mentioned he was a smoker. It's filled with ashtrays. Wherever you go, there's an ashtray. And every once in a while, I go in, not to smoke, by the way, I don't smoke, but I go into his office just to sort of feel the presence. I know that sounds a little weird, but it's kind of a nice way to relax and appreciate the legacy of the company. And the first thing you really realize if you study Walt is that Walt was unbelievable at adapting to change. First of all, he loved technology. He loved to use technology. And he also knew that the world was not a static place. That was true for his theme parks. That was true for his movies, for television, everything that he did. He was a true innovator. An innovator is someone who never stands still. Now, when that quote, I think you at one point read it to me, and I think we had just done a sequel to Mary Poppins. I thought, wow, this is good timing. I think I don't want to apologize for making sequels. Some of them have done extraordinarily well, and they've been good films too. I think there has to be a reason to make them. You have to have a good story. And often the story doesn't hold up it's not as strong as the original story. That can be a problem, but it just has to have a reason. You have to have a reason to make it beyond commerce. There has to be an artistic reason to make it. And we've made too many. It doesn't mean we're not going to continue to make them. We're making a number of them now, right? As a matter of fact, including to some of our best films, but we will only greenlight a sequel if we believe the story that the creators want to tell is worth telling.
Do you think then you can make originals, or do you think that the franchise game is still the
All right, folks, that was Disney CEO Bob Iger speaking with our Andrew Ross Sorkin at the Deal Book event. We'll be monitoring those comments. We'll have much more on Power Lunch when we come back after this break.
Sit.com.
Welcome back. It's time for the next installment of our Econ Ecosystem series. We've hit the big box stores and the mall operators. Today, we're going inside the mall for a look at the apparel retailers. Morgan Stanley's out with a new note saying Black Friday foot traffic was sluggish, as expected, given the cautious holiday outlook retailers issued earlier this year. American Eagle, Gap, Nordstrom, Victoria's Secret, all up following the holiday. But which names make Morgan Stanley's list of Black Friday winners? Let's ask Alex Strayton, equity analyst over at Morgan Stanley, the expert on the topic. So let's just start off with a big, bold question. Who won and who lost over this holiday shopping weekend?
Yeah, I mean, getting right to it, I would say the winners or the outperformers and the laggards as we saw them, and granted, this is a more limited data set, but on the winners front, we had Aerie, which is a part of the American Eagle portfolio. We had Gap, the banner within the broader Gap portfolio. Hollister, which sits within Abercrombie, and then Old Navy. Those are the ones that we saw as winners. And the way that we measure that, to be clear, is that all four had higher line counts despite either unchanged or even lower promotional levels. So what that means is they were able to garner the attention of the consumer without sacrificing margin. So that's how we characterize it as winners, can be subjective. I think on the other hand, there were some laggards per the data in our check, and that included American Eagle, Nordstrom, Pink, and Torrid. And really, it's the same type of methodology. And this group really fell into camps. They either had lower traffic on similar promotions compared to last year, or they had unchanged traffic on higher promotions. So effectively, it's can you drive traffic and how much does that hurt your bottom line as you're doing it? And so I will say this only reflects a single day. Holiday shopping is becoming less concentrated around single days. So it's not a perfect gauge of quarter-to-date performance, of holiday performance in aggregate. We have a lot to go. We have 8 of the 10 largest shopping days ahead of us in the season. So there's much more to go from here.
Alex, there's an argument to be made that consumer balance sheets right now are perhaps not as strong as they were a year or so ago because of the dissipation of stimulus money, that sort of thing. On the other hand, comparisons may be easier for some retailers given bloated inventory levels from last year, which have righted themselves this time around. On balance, does it mean that we're net okay, or does it mean that maybe these retailers have stuff left to do for the rest of the season?
Yeah, I mean, it's a great point on where the consumer stands. And I think this is the first time in a number of years because I've been a little bit more optimistic heading into holiday, but I caveat that as cautiously optimistic. And what that means is we do not expect like strong demand or a change in fundamentals for our retailers. Our businesses are continuing to operate and probably will in the fourth quarter at both sales and profitability levels that are below pre-COVID trend on average. But really, my more optimistic forecast is a function of a pretty low bar. Our retailers have set a low bar throughout the year and for the fourth quarter so far in the third quarter earnings season. They've planned inventory and hiring conservatively from the statistics that we look at. And they're going to benefit from a favorable calendar this year that I think people tend to overlook historically. So when I take that all together, it does feel like the market sentiment could be too bearish on these stocks for what, you know, to use your words, could be an okay holiday. This could really, lead to a January rally in my space, which, if you might remember, is very similar to the dynamic we witnessed last year on a late inflection in holiday trend.
One more quick question, Alex, about, I think if you cover Kohl's or some of these other with big card businesses, really significant. What is the disruption of buy now, pay later going to mean for the viability of those card businesses going forward?
Sure. So the card business is such a tricky subject in my space because there's such
all right, so hold on here.
But for some of them, there is real risk around it.
We've got coming into support of the Gamma bar that we know that's down here, 4550. Let's see if I can move all this stuff up. I've got I think we're on it right now. So this PT2 is inaccurate. This should be right here because this is that Gamma bar. So I was wrong. So here's the here's the what price is that? It has a little bit off. It's only $1. I thought it was $1.30 or something like that. So this is only $1 difference between SPX and SPOOS. So we're heading in right now. This is actually PT2. If you look down below, this is your gamma bar. If you watch the, look at your bottom of your screen in the center there. I'm going to swirl it around. This is the magnet that we have of 4550. So I'm not going to expect too much in here. There is this small area down here. We talked about this area last week. This is the buy the dip zone earlier in the week. So just keep your eye on this one here. There's another gap down here that never got filled. You see this gap down here, 45.30, 45.32 or something like that. Look at that big push down below. Down and down again into this close right now. I don't know what to say about it. I'm not really. This looks more like a squeeze. HYG is rolling over right now. VIX creating a nice fat bottom. We should sell the close. Even though we're on this gamma bar down here, we should sell hard and heavy just by looking at the VIX and HYG right now. Dixie's turning around to the upside. Apple is sitting on parked right now on its closing price on the close yesterday at 5. I closed yesterday. It's like the entire day was given back on Apple. Tesla selling down right now. Let me take a peek at Tesla really quick. I want to see what Tesla's doing. Is it down on its hourly trigger or not? Let's take a look. Yeah, it's blasted. It blasted through its hourly trigger right here. This is not good. It got a rejection up here to the downside. I'm not too concerned at the moment, though. Let's see what we got here. Weekly trigger and daily trigger is at 231. There is no trade, though, for a bull in here for Tesla. Dude, this looks like they're going to burn all the calls into tomorrow for Tesla. So it looks like they're pulling their stakes out even early today. Could get a good run on Tesla tomorrow. We'll trade it together, I think. Tomorrow we'll put it back over here. So we did end up. I want to point something out here, though, that's important. Stay with me here on this, but pretend that none of this happened over here, right? Remember, we're talking about this right here. So here, let me show you guys something. Give me a second. I'll also get set up. Hold on here. I want to show you something cool. Hang tight. So there's not too many people here, so this is good. We actually have you guys here. So I want to show you guys something cool. Let me close that fucking door. I want to show you guys something cool. So remember when I drew this one in earlier here? Remember when I drew this reversal here? And it was right here. We had this tweezer. I want to show you this tweezer right here, just for technicals. So cap here, right? Squeezed up here. And this is pretty bullish right here, right? Come back, check for a squeeze up. And what I want to point your attention to is when we drew these bars over here earlier today, that when we squeeze up, right, back over the hourly trigger, come back down, confirm the hourly trigger, right? And the expectation, pretend none of this has happened yet. So you can just make that maybe black or something like that. I don't know. Just pretend. Oh, no, sorry. Right here. Come on now. Let's pretend none of this is here. None of this is here either. And all this right here. And none of this action is here yet. Okay? None of this action is here. Well, this is what I want to show you. The reason that we drop these bars here, this is any time frame, 1 minute, 5 minute, half hour, hour. This can be monthly. It doesn't matter what bars you're looking at. What does matter is that when you have the recovery up here, right, on any trigger, right, we come down, we come back, we actually retested the half hour trigger. Immediately when that happens, you put these bars up right here. Or I do. And the reason being is you're looking to see if buyers still have interest. So the expectation would be that you squeeze up and you can make just that little high right there, even if it comes back and then makes that little high right there, or if it just goes straight up and makes the new high. That's showing the demand is there to go even higher, okay? Now, if you remember earlier, when we had this tweezer here and then this tweezer here and an immediate reversal to the downside, this is telling you automatically that buyers are not here. And if you look at the further price action in here, you can see that there's no demand, right? No demand, no demand, no demand. And we're like, hey, we're waiting for Beige Book, right? What does Beige Book do? Beige Book is neutral. It's not hawkish, not bullish. It's nothing. And the hedge stays on the market and the buyers have disappeared. It's very important to see that buyers, this was it right here. This was the moment where you knew that the demand to go up left the market. And then when Beige Book came out and it was a neutral, there was no reason to go up here and there was no reason to blast down over here. It's just neutral, right? And you don't have demand at this point to do anything. And what's going on into the close here? Just drag down, right? Drag down. Nobody wants to buy anything. Nobody wants to play in the market. The moves were made for the day. And the dealers like this as well. The dealers already have to pay out the puts and the calls. And they want nothing more than to destroy all of this, destroy puts, even though you get a put print down here, not like you would if you got a big blast down here, right? They killed a bunch of the premium in the puts. These puts were pretty expensive over here. So even if they pay down here, they're not paying what they would have paid back here. Does that make sense to you? So you can see that action. And now we're trading all the way down to this close over here. If you had seen this trade come up and catch that first one, even if it pulled back, it wouldn't have mattered. It still would have it still would have lent a hint that we're going to continue to go higher and higher and trade all this stuff back here. So you're seeing the will of buyers leaving the market here. Just watch how the will in this close is down to nothing here. Now, I'm not expecting much to happen into this close on this gamma bar. You'd need real money selling to get some kind of like real true bloodbath. You might get a little bit of weakness down here, right? But it'll squeeze right back up to that 45.50. So any kind of weakness in here on this gamma bar is going to be short-lived unless you get real money selling. Real money selling is what you're looking for this here to stick. Big, big, big selling. So at any rate, not expecting too much now into this close. You see HYG pulled back there to the gamma bar. You also saw Dixie squeezing higher. And you actually see for the first time in some time, VIX is starting to at least bottom. If you were to go on a 5-minute chart on VIX, you can see a flattening action on VIX. So this actually looks kind of bullish for VIX and bearish for S&P 500. So maybe we'll see a little bit of blood tomorrow. It's possible. Apple coming right back down to its squeeze, right down to where we closed yesterday. So the big squeeze on Apple all the way back down. Dixie looking bullish right now. NDX coming down now below 16,000. I think it's trading 15,984. But on a 1-minute chart, that's still flat at 16,000. So just keep that in mind as we come into this close here. No trade forming in this bell. I don't want to take any trades here. I don't see anything here into this close that is. I don't see anything in this close that is. Oh, I turned that off, huh? Let me put that back on there. Put that fucking thing closed. So I'm not seeing anything here that's like, yeah, buy this close for a squeeze up tomorrow. Anything like that. It would not shock me at all to see this shit get pinned with a hedge on the market for the news to drop. You could trade this in futures tomorrow before the bell at 8:30, but otherwise I'm going to expect a flat overnight, just sideways into overnight, anticipating that news that's coming out tomorrow. And I'll be honest with you guys, I'm not expecting any bad news tomorrow morning. I'm not expecting anything like doom and gloom on Friday, none of that kind of stuff that's going to move this market in any substantial way. So I'm hands off, doing nothing right now into this close. And I'll do nothing tomorrow as well. I might trade futures in the morning, but that's all I got for you guys. This is all GME's fault. Plebs got too cocky. GME traded exactly as it should have traded. So if you look at GME, GME did exactly what it was supposed to do today. So let's take a look at it. And see it right there? GME came up, just tagged almost perfect its weekly trigger. sold back down. Now just I want to show you guys something here. GME is not dead technically yet. So be careful of people out there telling you GME is dead. The trade on GME is still up right now. Still up right now. They're sitting on their half hour and hourly trigger. If they buy this shit down here, if they buy GME, either here in their half or on their hour, and furthermore, if this daily trigger keeps coming up, right, it's going to fucking blast off again. It's not done, is my point. If you want to know if GME is done, it is done under $14.67 over here. Done underneath this number. Like the run for GME is over. I'm going to show you examples of that right now so you can see it. Let's see if we can see where an example of a run on GME is over. We'll go to a 30-minute chart right here and just show it. And you can see it's selling off under its hourly trigger. See that green line right there? Just selling off under it. And you can see it, right? This is an easy way to look at it, too. Here's a great way to look at it. This is a great way to look at it. So you got price, right? Breaks above the hourly trigger. Comes back down and confirms. Off and running, right? Get the new high right here. Whoop, from behind. Back tests it, and boom, it's off. That's like a 90% guaranteed trade to make money. See how it comes back down again to test, right? And it immediately fails, right? Boom, down below. Gets the rejection, right? All this action before any of this action, all this action shows bearishness. And it all of a sudden just starts teeing off on its hourly trigger, teeing off on its hourly trigger, teeing off on its hourly trigger, teeing off on its hourly trigger. So far right now, you can't really say that the GME run is over yet. We still have price above the hourly trigger. See how it's below, it's above, it's above, it's below, right? And you're looking for, hold on a second here. Whoa. You're looking for a pullback here, right? But that's it, just a pullback. Squeeze it up and over, right? Or even consolidate in here just until you get that daily and that hourly up. So if you're a GME bull, it's not dead. It's kind of dead. If you look at this hourly trend is saying it's dead, but I wouldn't be 100%. I wouldn't be this is that red box. This is the red box I'm talking about. It's still kind of alive. So if it cools off down here, hourly picks it up, daily starts getting better. There could be some continuation. So check on this is the 1558 and 1467. You can check on that stuff and see if you can check on, like, when price comes down on GME to the hourly trigger, you just watch it. You'll know right away if it's going to be bullish or bearish on GME. So GME did just fine. So I got no. I'm not like anti-bear. I'm not bearish GME. It's just hourly velo coming back down. So if anybody's telling you, it's like, I know I saw something on Twitter, everyone's saying that it's just to sell into or something. But a lot of these guys that are in, I'm not in GME, but a lot of these guys that are in GME, they probably had an opportunity to get out as well. So retailers and stuff like that. According to Miro, mega bears have did a destroy. I don't think so, man. I think that 45.50 holds. And even if you get down, it's gonna squeeze right back up again. So like any of that doom, I don't see it. I don't see it until end of month. End of month, I think they become fucking huge sellers. Maybe they front run it a day or two or something like that, but I really don't care. So I care more about the actual end of month. So we get an end of month heading into the first is when I'm going to start getting my bear on. Not right now. All this right here looks to me like manipulation at most. At best, that's what it is. As a matter of fact, Apple is back to its yesterday price at 4 p.m. So I'm not too concerned at this point. This market could easily squeeze up to 460 on Friday at 4 p.m. So I'd be very sketched out if I was a seller here. I'm not sketched out, but just not. I'd be more confident as a seller on the first. I think the next 2 days. What do we got? 2 days left or something like that for the end of the month. I'm not gonna fuck around with this for the end of the month. Let these guys fuck around and do their thing. Like you come back tomorrow and you got Doom, and then you come back on Friday and you're way up again. And I wouldn't want anything to do with it until then. And then people go on social media and they're like, why are we down on Thursday? Why are we up on Friday? But this all looks like just don't mess with it and just wait and see. Sit on your hands. Then wait and see. So what's up? What else you guys got? You guys got anything before we close out today? His Doom is pretty short-lived. Yeah, I see the Doom, but it's not like, oh my God, we're totally fucked. Market crash today. I wouldn't take that bet at all. Okay, that's all I got for you guys. It's 3:41. We got 20 minutes left. I don't see anything. Let me see if I can see anything here. Yeah, I guess I see the... Here, let me see if we can look at something together. Hold on here. Is that SPY or that's NDX? I guess I can see NDX saying that. Hold on here. See if I can... No. I mean, we're there. Within a day or two, we're so fucking close, dude. Hold on a second here. I'll show you guys this. Give me one quick second. Where is gamma? Net gamma. No, I don't want net gamma. I want seasonality. Sorry, apologize. Okay, so this is seasonality, right? Can I do a vertical line here? I don't know if I can. Yeah, I mean, let's look at this right here for a minute, okay? Let's whoa, hold on. What am I doing wrong here? Hold on a second here. Okay, so just bear with me here. We're going to do this by hand. So move that over. So let's look at this right here, okay? We got so this tick right here, right? This is today. This is today right here, right? So we're coming down a little bit. Yeah. So we're like slightly off. You see some down moves, but then an up move right here. So you got down tomorrow and then up one more time. And it just kind of gets like volatile. It goes like it's gonna look like it's not distribution, but it is distribution. And it's going to take time. You've got 241 sessions until the actual break right here. And we're only on 229. So you're talking about, we got, 229, 241? What is that? 12 sessions of buy the dip and sell the rip on SPX. That's a lot of fucking sessions, right? It's the first 2 weeks of up, down, up, down, up, down, up, down, and then you finally get the roll into the middle of December. So this is all, it's not quite garbage trading, but it kind of is garbage trading. It's like buy the lows, sell the highs, and then you actually get your down leg. You'll probably have people putting in put spreads and stuff like that into Friday, schedule or dated for mid-September or mid-December. And they won't get a payout until that time period. So just be aware of that. That you should see some dog shit trading in the next 12 sessions or something like that. All the big moves are done. You might see that one more 4,600 on Friday, and then everybody's crying. Matter of fact, if you're a bear, and we squeeze up, if you've got a spread on for middle of December and we squeeze up to 4,600. Don't even fucking sweat it because it's going to roll right back down and then eventually sell off. Yeah, look at GME's being bought right fucking now. These savages. Look at these guys. These guys are savages. Fucking straight savages. Just don't get your...
Early markets on close imbalance, still sitting at 600.
I would say from this point forward... I would say from this point forward, if you're a bear or a bull, right? Buy the dips, sell the rips. Expect range bound for the next 9 sessions, and then an eventual, like a slow, gradual go down, and then eventually a roll down in the middle of December. I already did I did a whole thing on IWM today, a whole huge like hour-long presentation on IWM, my thoughts on it, in-depth analysis, talked about where to long it, the dates to long it, and how long to long it. So if you want to go back earlier in the program this morning, I think Binky will likely cut that out for you guys. I even posted, I have pinned to my my Twitter handle my thoughts on it as well as a short synopsis on IWM, where I think it's going to go and that kind of stuff, and where you buy IWM when you sell IWM. I'm very bullish on it heading into March, but there are some key places to enter and exit IWM. So go back and watch all that stuff. It's important. I show the data as to why it's important, and that's that kind of stuff. So don't get too crazy in here. Don't drink the bull Kool-Aid. Don't be drinking the bear Kool-Aid the next 9 sessions. Just up, down, up, down. Eventually it'll roll down. It's going to look like you're going to see bulls saying that it's a consolidation. They're likely wrong. And you're going to see bears telling you it's going to crash. They're likely wrong as well. You're likely going to see up, down, sideways, and slowly come down into the next couple weeks. Then you get the big fucking distribution sell-off in the first week of December, second week of December, something like that. Be careful. Bulls and bears. Don't drink the Kool-Aid next 2 weeks. Just like trade it up, trade it down, and then you'll see it just staircase down into middle of December. So the meme run, okay? They changed their so hedge funds changed after GME started, and data scientists analyzed what went on there. Now these hedge funds have baskets of risk of meme stocks, right? What they do is they short the fuck out of these meme stocks, and then when they come into the end of month or end of quarter, they run them up. They take the hedge off, they run them back up, and they put not the hedge, but then they re-short them again. You guys know about that stuff? I used to post information on that stuff months, years ago, maybe a year ago or something. But so basically, they have a basket of memes, right? They short the fuck out of them on a high, and they learned this from GME, and so they studied this stuff, and that's what they do now. They actually own these fucking stocks. They fucking own them. They literally own these fucking stocks. They short the fuck out of them, and then when you can see it while they're squeezing right now, coming into end of month, and then they take the hedge off, not the hedge, but they take the short off, let it squeeze back up, and then they come right back in and re-short it one more time. Very, very like common thing these days. That's why I don't like meme stocks anymore. I'm not a fan of them anymore. None of them. I don't care what the name is. And I got no liking of meme stocks. Not you asking, but I want you to know something. Okay. There was a time. I'm an old trader. There was a time where trading meme stocks was really fun. Now, to me, it's one of those things where you just know it when it's gonna. You basically know when it's gonna happen. You basically know it's gonna happen end of month, end of quarter. You know it's very public right now of what meme stocks have turned into, and it's kind of disgusting to me. So, if you guys, when I show you guys those spec growth stocks, those spec growth stocks are what become memes. So I know it's hard to digest, but if you and I were in a room, right, you should stick with the stocks that are like IPO'd under 3 years. They're being accumulated by hedge funds over time, like that one there, that PSTG. You collect those stocks. Those are the stocks that you collect, and you come back in 1 to 3 years. If you guys do that right, you'll see the transformation from an IPO that's $10, and you'll see the transformation of these hedge funds that initially buy it. They run it up to $150, $300. You see young kids get involved in it on the ass end. Typically, not always, but typically at the ass end.
Markets on close imbalance. One spot.
As a matter of fact, this morning I felt terrible because I was on Wall Street Bets, and people were talking about Braze, which was good. Braze is a good stock to own. It's a good stock to hold on to for some time. But it's just becoming a talked about stock now. And you'll see Braze in 3 years will be like
Then sign up
Braze will
today
wind
and
up
get our
being
special offer
a
of
meme
Financial
stock
Juice
at some
Pro
point.
for a year's worth of our service for the price of 1 month.
Let me turn this shit off. You'll end up seeing that. Oh, we're already closed here. You'll end up seeing you'll see like how a stock becomes what it becomes, and then you'll see so many people talking about it, and the room gets crowded, and it's sad because they become the bag holders, and then it becomes a stock that's to be not fucked with, but it's so hard. These guys own these goddamn stocks at $3, $1.60, $10 pre-IPO prices. They don't fucking care about some retailer. And if I meet you in a bar somewhere and you're constantly beating the drum on a stock, and I get personal with you and say, show me what price you own this ticker in, you're likely way the fuck upside down. So while you're telling me it's going to go up is because you're upside down in that stock, right? It's not because it's actually, and it can go up, but it's not the fundamental reason why that ticker is going up. And the sad part is that nowadays, after GME, they treat a lot of these stocks like memes now. Not all of them, but a bunch of them. So if you like meme stocks, you really should be the first one in, right? Not the fucking last one holding the goddamn bag. I know that's a very touchy subject to talk about. I know it pisses people off. It doesn't mean it can't go up again or it's not going to ever go up again. But, dude, I'm old. I talked to you guys about that one ticker, DGLY. I talked to you guys about that ticker once, right? I even brought up news articles from back in the 90s. They're a great example of a ticker that had its time, a business that had its time. They were the kings of Wall Street, right? The shiny new rock on Wall Street. They had articles being written about them in the New York Times, New Yorker Magazine, you name it. And they had their lifespan. They went down and down and down and down to like under $2. And since then, yeah, they have spikes and stuff, but just be careful out there, guys. Like, seriously, be careful. Even GME, dude. I was in GME when it was worthless. It's tough, man. I know for a fact two things. I can see that someone has no time in market, doesn't have a decade or more in the market. And then I can also see that GME brought in a ton of people that had no business being in the stock market, like zero business in the stock market. It was wild, man. And it was wild to see even Wall Street bets. People will say to this day, they'll say things like, well, it's evolved over time. Fuck no. Wall Street bets fucking died, in my view, when GME became a stock of the people. I remember it happening. It might come back. It seems like it's coming back to a better Wall Street bets again, but it's not going to be until all these people get washed out of meme stocks. That could take years to do. It's kind of a tragedy, guys. Sorry. Yeah, it's tough. Dude, you guys really want to be like the first guy in a fucking stock that you own for like a year, 3 years, and it just screams up to $150, $300. And then you'll have the perspective of this is the top, and some kid's going to be telling you, no, it's going up even more. And they're going to get stuck with the bags the whole way fucking down. So just be aware of that. You guys will get this, not you, but like some of you will get this in 10 years. You'll be like, I get it now. And it's worse now too, because of what these hedge funds are doing, creating these meme baskets. It's worse than it was before, that stuff was going on. The same thing goes on with zero dates. I don't talk about this a lot. We have some time. The market's closed now. Is it closed? No, we got 6 minutes left. So I got another one for you. So back in the day, right? I've been trading zero dates for a long, long time, almost a decade. It wasn't crowded. There'd be like one person, not one, but there'd be like a very small amount of people knew about arbitrage on zero dates. There was a time when it was super easy, and it's become harder and harder and harder and harder to trade zero dates because too many people are trading them, including including these fucking hedge funds. You know, once something gets out of the bag, it's kind of hard to, like, they try to defeat you in what you're doing. You know, they try to defeat what you're doing. You don't want, remember we had a conversation once where I was like, you have do-gooders, you have Robin Hooders, not Robin Hood, the company, but you got people that think they're doing a good thing. They're like, oh, we should let the world know about this, right? Once you do that, it's fucked, right? It's out of the bag. Everybody knows. It's too many fucking people. So it's like an inverse correlation to what you think. You think you're doing something good, but you're not. It ends up fucking up a good thing. So yeah, the edge is gone, man. You think you figured something, you think you're a rocket scientist, you figured something out, and you're spreading it around so everybody knows, and then, you know, you think you're smarter. There are professionals out there that'll fucking outtrade your ass with power, with leverage against you. So just, you know, it's not that you can't do this stuff anymore. It's just, what are you doing it with? You know, you got a group of people, right? Millions of people that are hyper focused on a BBY and AM, not anymore, but I guess they're on the sheets, but AMC, GME. I'm gonna ask you guys a serious fucking question. How many fucking people are pulling out the next GME? Not many, right? There aren't that many. You know what I mean by that? Like phenomenons like that, or even tickers like it. So it's hard. If you're one of those meme guys out there, right? If you're a bag holder out there, it behooves you, or come in the stream and just say, hey, Cap, do you have anything on the list today? And I'll give you these. I used to talk about these tickers more often than I do right now. But if you ever want me to talk about these tickers, I can bring them up every day for you. They're actually worth looking at. And I assure you, you'll be happier. Overall, you're going to be happier. They're going to go up like you want them to. And literally a year to 3 years later, even if they go against you, they're likely going to continue to go up. And as a matter of fact, I haven't looked yet at PSTG, but I'm assuming, just looking at the price action on that ticker, I'm going to assume a few things. I'm going to assume that it fucking has great reports. I'm going to assume that its guidance is fucking outstanding. I'm going to assume that fucking company definitely has real cash coming in for a real product. I'm going to guarantee that fucking company is being bought by hedge funds by its price action, and it's likely going to last for 2-3 years. It doesn't matter where you buy. If you buy at the top today on that ticker, right? If you bought the top of that ticker today, in 6 months you're going to come back and it's going to be up. Does that make sense? You're going to look like a good investor and a good trader. So I know it doesn't. Yeah, I know it doesn't like make you happy, and you can't get on Wall Street Bets and pump it up, or Stonk, whatever, I forget, the Super Stonk and all these other places, or on Twitter or StockTwits. The excitement's not there for you, but dude, there's so many better fucking tickers out there. And that's a hard fucking pill to swallow. It's a hard drink to drink, to take that L, or, you know, you can leave it. It's not like you have to sell GME. Let's say you're upside down GME. You can leave it and come back to it and put a sell on. Let's say you bought GME for $20 and it goes to 10. You can just say, fuck it, I'm not going to pay attention to it anymore. I'm going to put a sell on it for 20. If it ever comes back, I'll get my 20 back. Or I'm going to settle for 15. If it ever goes back, this is an example, not actual money talking, but you get what I'm saying? And I'm telling you, you exit that shit. Even if GME went to fucking $500 one more time, it doesn't fucking matter. It really doesn't. I don't know what to say to you guys. You know, there was nobody there buying it at 60 cents. There was a very small group of people. There are people, like, think about that. Think about the fact that when GME was originally run up, it was a very small group of people. Very small group of people on Wall Street Bets. That even in Wall Street Bets was a small group. There was 2 or 3 runs that took place before Wall Street Bets even jumped on it. And as a matter of fact, at that time period, I think Wall Street Bets only had 150,000 members, maybe. Max. I think that was the max at that point. And we thought Wall Street Bets was huge. Now it's got, what, 1.5 million members? Fuck no. Who do you think those 1.5 million members are? You think those fucking 1.5 million members are real traders or investors? Those are fucking like Bob and Mary on Main Street that got caught up in the cultural phenomenon and wanted to buy in. They're all fucking bag holders. Every fucking last one of them. Like 9 out of 10 of the, let's say the original people, right? There's bag holders in that group. Now you've got a whole other group of bag holders. You know what I'm saying? Yeah. I know. It sucks. The saddest part of this is they weren't in the beginning and they haven't had the experience with other tickers. When you have that experience with those tickers for many years, you can identify it and see it. I remember begging people not to fucking, I remember, dude, when we hit the top of GME, I was like, please, all these new people are coming in. I'm like, please don't fucking buy this ticker. Don't fucking buy this fucking ticker. And they didn't care. They developed a whole like thing. It's a stock for the people. It's a this for that. We're going to stick it to the man. At that point, right? At that point in GME and in Wall Street Bets, it was all sharks. It was legitimate professionals, not the professionals from Wall Street Bets, like real professionals in like tanks of hedge funds and banks around the world invaded to find out what this phenomena was and how to maximize profit from it. Not some guy from Main Street, not some guy that's got a job at Domino's. I'm talking about smart motherfuckers that were there to capitalize and take all your fucking money. That's what they were there to do. So you know, I don't know. Can that happen again? Sure. Would I be betting on it? Fuck no. I'd be looking for this company like PSTG. It's a great goddamn company. Well, it looks like it's a great. I can't say because I haven't looked it up yet, but those are the memes you buy. You want to be the guy or the gal that fucking owns that shit before anybody else. You wanted to own GME when it was at not zero, but very fucking low, and then watch that shit go up to $500 the first time. Trust me, if you were one of those guys or girls, you wouldn't give a fuck after it hit that 500. You were out, you took your money, and you ran. You get what I'm saying? I know. I feel bad. I feel terrible because this is the same conversation that I had with people when it ran up. Like when it ran up as it started to roll over. You know when GME died? The fucking day they fucking stopped trading that shit. They had to shut it down because it was going to be a VW, a Volkswagen. That's what it was going to be, a Volkswagen from the 1980s. So that's not there anymore. They don't let. That's the other crazy thing. This is the other. Let me give you the last crazy part of this. Let me give you the true honesty here, okay? When they shut that shit down, right, they will do it again. You don't win. The job of this market is to take all of your money for them, not you, okay? So you have to live in their world and in their rules, and when you break their world, they will fucking stomp on you. It's kind of like a parent and a child, right? As a child, it's a benevolent dictatorship, right? As long as you live within their rules, you're good to go. If your child does something absolutely fucking that they're not supposed to do, right? Like you walk in and your son killed somebody, right? You know the gig is up, right? The parent is going to step in, right? And turn that child in, right? To the police and take care of all that stuff. The child is not going to get away with it. If you tell your child, hey, you just killed somebody, you can't do this, right? So the kid kills you, the police are going to show up and come get you. It's their world. You just live in it. And as long as you play by their rules, they don't care. If you go in and sneak some money out, you go in, you make some money, you're with them when they're going up or down, you're good. You should be going with them and not against them 99% of the time. And if you're going against them, you better have a way to beat them. And we did have a way to beat them in GME, but that's not the case anymore. Let's just say GME started to really run, they would shut it down again. They'd come for you and shut it down. You'd get fucked up and it'd go back down. You'd be talking about how it's going to keep going up again. It's not going to happen. It's horrible to say. It's horrible. Right? That doesn't mean you sell here on GME. If you like it, if you don't mind losing money, you want to get trapped, that's fine. But I'm telling you, like, you want to be the roaring kitty for yourself. You know what I mean? You want to become the roaring kitty of some ticker. You don't want to be on the tail end of roaring kitty. I like roaring kitty, but that whole thing started as something completely different. And you became not you, but like the general public became the bag holder of all this. Yeah. Yeah, we can say it's the same thing with dealers. I've like people are like, well, why doesn't it go up or why doesn't it go down? And I'm like, they're not. You're not going to bankrupt a dealer. Market makers, dealers are not going to become. Well, they're two different groups, but sometimes they're the same. But or they have overlap. But a true dealer, right? Like the guys that run the exchanges, they're not going to go bankrupt because of you. You get what I'm saying? It's never going to happen. We wouldn't have a market if you bankrupted them. You know, it's their world. We live in it. And you can beat them sometimes, but it's better to go with them. You're going to have a much better time if you go with them than against them. You're going to lose more than you win if you go against any of these guys, including dealers. Yesterday during the daytime, we were watching what? We were watching 12 stocks that were 12% of the market, 8% of the market, 7% of the market, or not the market, but like the indexes. They were mooning. SPOOS was pinned. They weren't letting it run up. You watched HYG yesterday go to the moon, and they didn't let SPY go up. The dealers had no business to chase that unless there was real money buying coming into the market. We knew that wasn't happening yesterday. So there was nothing they could do, right? Nothing. And they ended up squeezing that shit. Let's think about that. They squeezed this shit after the bell, and then they dumped it basically on the open, right? An hour afterwards, they dumped it. So it's like something that they're not going to give you a free lunch. You don't get a fucking free lunch, regardless of where everything else is going, you know? Yeah, there's whole splinter cells and subs, and I don't like this person. And look at this. They're buying it right now. Look at this close right here. Like, this is all getting bought back up down here. Oh, this is all scam. This whole thing is a scam right here. Price scam. It's all a scam. You don't win. You lose. You end up fucking losing. So it's terrible. It's terrible. And you'll learn this as time goes on. You'll figure this out. You'll be able to identify it and see it and be like, I get this. Let me see what you guys are saying. What are you guys saying down there? I'll DCA my MC a long way with option profits. I'm no longer waiting for the squeeze. Yeah. You can trade this stuff. I'm not saying you can't trade GME down or up, but the Kool-Aid drinking, I'm telling you, dude, think about this. Some of these fucking people have wasted how many years now? How many years has GME been coming down? Let's look at GME really quick, right? Let's look at this for a minute. How many years has it been now? How many years? I don't know how many years it's been now. 3 years? Has it been 3 years? How long has it been? February of 2021, right? So we're coming into February, right? So we got what? We got 21 to 22. We got 22 to 23. It's 2 years. 2 years these people have just been sitting there. They could have made money. They could have made money hundreds of times in that time period. So I would be really, really, really careful. Really, 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 really careful. Really careful. Yeah, it's been almost 3 years, right? Almost 3 years. So I don't know, man. And all that time, right? Just look at this. And all that time, you could have been doing all kinds of other shit. And they probably think that they're probably looking at this and thinking the world's biggest bear flag. I'll tell you what, man. Go back and look at DGLY. Want to see DGLY? World's biggest. You want to see the world's biggest? Let me see if I put this on a weekly, maybe. 1 week. Is this even going to show it? You want to see the world's biggest? You want to see the world? Not this is the world's biggest, but you get the gist that I'm talking about. Let's look at DGLY. You really want to trade fucking GME like that? Hell no. Hell no. You really want to trade that? This is what you're going to pick as a stock market participant. This right here. That's what you're going to pick? No fucking way. You'd be out of your fucking skull. Why? Why would you do this? Look at a ticker like Apple, and then look at this. It's a disaster. It's a fucking disaster. Did they get a big squeeze? Fuck yeah, they did. Look at that giant squeeze up here. Whoop. How long did you have to wait for that to happen? How many years is that? That's 2015, right? There's the top. This is 2008, right? So 6 years you waited just to get back to halfway where it was, right? Just to get back to halfway, right? So let's say GME goes up here, right? You go halfway up, $250. You're probably a fucking bag holder way over here. And even then it comes back down. You're waiting years for a squeeze. Years. So I don't get it. I don't get it. You could buy the fucking S&P 500 back in 2008 and 7, and you'd be murdering it today. Murdering it. So I don't know. Yeah, see, yeah. I don't, man, there's other companies. Well, look at fucking the bike company. What's the bike company name? Peloton. You know, these companies, they come and they go over time, and no one wants to hear that. They're very emotional, passionate about this stuff, and telling you what, man, you do a decade of that shit, right? You do a decade of fucking DGLY, you do a decade of GME, and you're gonna look back on those 10 or 20 years and be fucking, you're gonna be beside yourself because you could have just bought a bunch of you could have bought this right here. You see this right here? You could have bought a company that just opened, just IPO'd, making a real product, and catch that move right there. And then you can go to the next ticker that just IPO'd and catch that one up there. You get what I'm saying? Brutal. I'm telling you. And most of these people are buying it here. Down here. They're on the wrong side of the trade the whole way. Wrong side of the trade for years. Years. Yeah. Yeah, I used to, so you guys remember when Peloton, I was so angry at them because they could have bought a bike company, outdoor bike company, you know, like an Apple, like have something that people need, right? Hey, you got your bike now, you got your little screen on there, and you can fucking do your Peloton workout on your Peloton bike out in the real world, keep exercising, and we knew we were reopening. How, when you ask those questions, how did they not do that? It's because they took the fucking money and ran. They took the millions and they said, fuck you, I'm out of here. That's what they did. And they bought and invested in something else. So, and then what do? We created bag holders. You guys understand what I'm saying here? So, and I feel terrible I feel terrible because when you get, like today, when you get a squeeze, or if GME squeezes up to $100 or like squeezes up to $250, it still doesn't matter. It still doesn't matter. Can you imagine like having like you get in a car accident or something, and you need money, and you're like, well, I'm in GME, but it's not hitting right now, so you can't even remove the money. You're just like stuck until that money comes to you. So. Yeah, you guys remember that shit? And where's Peloton right now? I'm gonna assume it's in the fucking dumpster. I mean, look at that shit. That's Oh, hold on a second. That's Peloton. Does that look familiar? It looks like DGLY, doesn't it? Looks like DGLY. You know, will it squeeze again? Sure. Does it matter? No. You want this company right here. You want Peloton when it was IPO, right? Here's the IPO. That's when you wanted to enter Peloton, right? So think about this. Peloton IPOs, right? I show you these tickers all the time, right? Like, hey, it just IPO'd 2020, right? I tell you guys, I'm like, hey, this company just IPO'd. It's got this, got that, it's got this, making real this. And everyone's like, fuck that company. I want to trade GME. And I'm like, no. Eventually it's going to do this, right? You want to be this guy. You never want to be this guy. You want to be this guy over here. Make sense? When the price goes up to the moon and Peloton's cranking, right? And you got it's just you. It's one person over here. It's you. right? And no one wants to listen to you. And then you're up here, and here's you again, right? And now you've got this guy, 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 this guy. Then you got people that hate you down here because you're telling them fucking abandon ship, and they're telling you, fuck you, no, we're just getting started. You know, and all these people is a cacophony of noise that doesn't mean shit. And they are all going to become bag holders in the future. So this is a stern lesson that you want to be this guy. You want to be the only person in the room saying, this company just IPO'd, they got this, they got that, they got this, they got that, right? And you just start accumulating like a market maker does, like an early hedge fund does. And then when we're up here and these people are telling you all this noise, you're just like, get fucked, bro. You should have been listening to me back here. Okay? Back there. So personally, I like to see an IPO for anywhere from 6 months to a year. I like to see it not be a meme. I don't like when Instacart, when some of these companies IPO, I want nothing to do with them. It's when they come up, when they IPO and they're under the cover, right, under the radar, and they start to make their way. Do that. Here's PSTG. I don't know anything about this company right now, so don't hold me to this, but it looks to me like this. Look at this IPO. This looks right to me. IPOs comes down, comes up, comes down. What's it doing? It's just fucking going up. That's all it's doing. It's just going up. Just ramping, right? They're just buying it and they're buying it and they're buying it and they're buying it. So you want to be in these IPOs when they first come out, right? Down here, trade that up, trade that up, trade that up, all that kind of stuff. And you want to be like set an alert, snap a line, set an alert. Every time it comes down here, you're just buying it and buying it and buying it. And then I'm assuming, not assuming, but at some point, everybody's trading it, and that's time for you to get the fuck out and get out of there. Yeah. So it's a hard lesson to learn. When you learn it, not most of you, but when your friends learn it and people that you see or meet out there, when they learn this lesson, they become like this now. They look for companies like that to do. Let's look at Braze really quick. It's a BRZE, right? I think they have don't they have a, I mean, look at this. I shouldn't say I don't like IPOs that start up high. I like IPO. I guess it doesn't matter, but hold on here. So Braze, right? IPO'd super high up here, right? Hold on. Super high up here, right? IPO'd super high, blasted down here, and it started to level off over here, right? You see that leveling off down here? Right? They're buying the dip now. They're buying the dip now, right? You check, then you have some history now in this company, right? And you find out how all the awesome things they're doing. And now, what is it doing? It comes down here, you buy it. Comes back down here, what do? You buy it. Comes up here, what do? You wait. And when it comes back down again, you buy it. And you know why? Because this was all being bought by hedge funds down here. You know what I'm saying? So I don't know what to say to you. Yeah, I don't like the CEO of AMC at all. He's a fucking scumbag in my view. What about Robinhood long term? I think Robinhood has a lot of potential for an M&A. I feel like they've squandered a bunch of shit as well. Oh, that's MasterCard. I don't know why I did. Oh, I did M&A because I was talking about M&A. Hold on. Like, look at this. I'm gonna tell you exactly what this is. Let's look at Robinhood really quick, okay? So Robinhood, meme stock right out the gate, goes right to the moon, right? What else happens? Sells down to nothing, right? It's trading $8 right now, $8 or $9. What will Robinhood ever come up? Yes. What does it need to come up? Do you know? Is it being accumulated right now? Let's look at that. Is it being accumulated right now? It doesn't look like it to me. Or it kind of looks like it. It kind of looks like it's just parked. right? You know what it looks like to me? You buy it and you wait for an M&A or for something to set it off. So let's look at this right here. If you wanted to buy Robinhood right now, where would you buy it? This is April of 2022, right? You can buy it if you want. You can buy it here, 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 right? You can actually buy this right now. This weekly is coming down on you right now. It's kind of bearish, right, to get even lower. But $8, I wouldn't mind owning that right there. Robinhood, would not mind owning it at $8. I'd rather own Robinhood at $8 than GME at $8. They have some potential for an M&A. They have some potential for having a better trading system or a better platform for young people. So I kind of like it at $8. Fuck yeah, I like it. I like it at $8. I like it at $8. I do. I like it at $8. I'd own that for years and have no problem owning it. Yeah, I like it long term. I like it long term, but not big. I like it long term only in two things. I like it long. I should rephrase that. Let's look it up really quick. Hold on a second here. Give me one quick second. We'll look it up together. I have to look at it. So hold on. Give me one quick second. Hang tight. Let's look up Robinhood. So we're gonna check. Let's see if we can look up Robinhood here. Yeah, so let me see if I can bring you over here. I hate this company, but they do some pretty decent free shit, so hold on. Okay, so here's Robinhood. Oh, no, is that Robinhood? That's Duolingo. Hold on a second here. Let's look up RH. Like, Duolingo is one that I like, right? Here, let me show you one that I do like. See Duolingo over here? You know why I like Duolingo? You see that right there? Revs. Look at these revs. Up, 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 right? Look at this earnings per share. Look at this earnings per share. Up, 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 up. Leveling off a little bit. But you see that progression right there for Duolingo? I like that. Let's look up Robinhood. Is this Robinhood, RH? No, it's Hood. My bad. Hold on a second. Let's look at Robinhood really quick. Because it's not just the chart either. I want to see a bunch of other shit. So let's look at Robinhood and see what it says. Revs up. It's looking pretty good. Starting to become, earnings are getting better on Robinhood. That looks good. I like this about Robinhood. These things look good. Year over year growth, 32.29%, right? I like that. PE, 23.87. Not too bad. Would prefer 14 or 13 or something like that, but 23 for the potential growth, I think is very low. Very low, very good. Its valuation is good for what it could possibly do. So yeah, I like it at $8. I don't think it's a bad company at $8. I don't think Robinhood is Peloton either. I don't think Robinhood is that company. They have two good things coming for them. Robinhood can become a better platform, right, where they should have real charting and all that kind of stuff. A better brokerage, I should say. If they could grow into a Tasty or grow into a Thinkorswim or a TradingView-esque kind of a thing, if they were to be an M&A candidate to pair them up with a brokerage in the future to turn them into a bigger company, I think that's another positive for them as well. And whenever that event happens, you'll get paid. CEI has 6 million in one stock splits. So I don't know. You gotta pick these companies the right way too. It's not just are they being accumulated. They have to be being accumulated. They also have to have the data to prove it. And I really don't like things that are being promised. That's another thing. I don't like companies that promise you shit like Tesla. I don't like it. Like Tesla was horrible to own for years. It really sucked. They weren't delivering shit for a long time. So those years passed on Tesla where it wasn't worth owning. There were other companies, better companies out there to own. And look at this consolidation, dude. This is what? June of 2022, right? Year and a half, it's just been fucking parked. Robinhood's just been parked down there. Tup, don't know it. Don't know it at all. What else you got there? Yeah, it's over the counter now, right? So we'll go. You know what we'll do is we'll get back into it. We'll start. You know what we'll do is we'll start looking at these companies. We'll start looking at these companies again that are available or worth looking into. So here, let me look at some. Hold on a second. Let me see if I can find one of these for you right now. Hang tight here. Like, let me bring up some tickers for you. All right, ready? I'll bring up some cool tickers for you. You want some cool tickers? I'll give you some. Let me look at these first and see. I mean, that's a gorgeous ticker right there. You want to see a gorgeous ticker? That fucking thing is gorgeous. It's probably done right now. Actually, I'd be trying to short the shit out of this, but this is a good ticker. Like this ticker, if this ticker comes back down, like look at this, they failed right there. Right? It's probably going to fail and come back down to $42. That thing came back down to $42, I'd be down to buy that fucking company. SYM. SYM is the ticker. If you look at this ticker, SYM, Symbiotic, excuse me, and do your due diligence on their fundamentals, I bet you it's a kick-ass company. I like Affirm right now. You guys know Affirm, right? That's a big meme stock. Let's take a look at it. See what it's doing. Yeah, I kind of like Affirm. It's already done its thing. Well, not really. No point. But look at Affirm. It's got a little bit more to go. $39. If this ever comes back down, though, right? If this ever comes back down in a weak market or something like that, I'd be down to buy that one right there. Set an alert at $25. Up, down, up, down. They're just buying it. Up, down, up, down, up, down. Just keep buying it. Affirm. I like them. IQT. We've talked about them in the past, right? Not IoT. I said IQ. IoT. This one, we've been tracking this one since earlier in the year, right? Do you remember this? We talked about IoT for years. And just look at it. Boom, 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 boom. And it just keeps going. Comes back down to its daily and weekly and just keeps crushing it to the upside. So we'll look at these tickers again. And I'm telling you, you do a due diligence in these companies that I'm telling you about right now, they're fucking baller fundamentals. What else do I like? FLNC, S, DRCT, CRBU right now. Now, I wouldn't buy this here, but if it comes back down, I would. Like, if this shit comes down, that daily trigger, I'd buy the fuck out of that. Anyways, you know what the other cool part of this, too, is? Once you guys get these tools, you're going to be able to set alerts on these things, and when they come back down, you can see this one trades off its weekly, right? Weekly. Dude, like this is a weekly trading stock, right? IoT. All right. I'm going to let you guys go. You guys are trailing off right now. I will see you guys. I want you guys to have a great night. I'll see you guys again tomorrow. Tomorrow's going to be a long-ass day. I might be late tomorrow only because Tesla event is like, what, 2 p.m. or something like that until, like, I think it's 3 p.m. Eastern Standard Time. So that thing's going to take like 2 or 3 hours. Maybe I'll be on at like 10:30 or 11 or something like that. All right. I'll see you guys tomorrow. Thanks for showing up every day. See you guys soon. Thanks, guys. Thanks for showing up today. Sam, I have to call Joe here in a little bit. And if I have time, I'll try to call you, man. I'm trying to get together with Joe today and get some stuff worked out. But I will try to call you today, brother. Definitely.